Good morning and welcome back to the second session on Foreign Exchange Management Act. Yesterday we saw the basic premises of the new law. Though we call it the new law, it's pretty old now because it was introduced in 1999 and we are almost there, finished 2019. So that's quite a long time for this law to have been here, and it's worked well because we seem to have done well from the foreign exchange side. At least, I mean, not that I'm an expert to comment on this, but then I think somewhere we've stabilized and we aren't our currency is not so weak as, in comparison. We aren't strong yet. The Indian rupee is definitely not one of the strong currencies. Definitely, it's not a weaker currency also. So it's pegged somewhere in the middle, which is the purpose of this law. And it has happened. And one good thing seems to be that we are attracting a lot of investment from abroad, which means we get a lot of money into India, which comes in. There's also a downside to this. We'll talk about it when we actually come to the procedures. So yesterday we saw a residence, and we understood. I shared a flow chart with you, and one of the participants raised a query. And so that was very interesting. I didn't have time to answer that query. But then, since it was the fag end of the session, but thereafter I've also resolved it. I've communicated the solution to him. But the point here is it's interesting for all of us because Mr. A is abroad most of the time. He's on consulting assignments and he keeps going abroad, and he's not resided in India for more than 182 days. Due to his travel. Okay. So then yesterday I asked him, where is your business situated and all that. I don't think that's really relevant. Now that I've sort of my mind around this concept, I think that's not relevant because in the flow chart, he would go straight away out. Because the first question you're going to ask him, and that's the fundamental question is, did you reside in India for more than 182 days? And his answer is, no, I was not in India. I was abroad and I was not in India for more than 182 days. So straight away he would get out of this concept, and that's my view. Of course, you could take a view, and that's a very, very remote view, that residing, the distinction between residing and staying abroad. So that's very nice distinction. But the point here is he was not physically present in India for more than 182 days. Therefore, he would not qualify. He would go away. He would go out straight away at the first option. Only if he's resided for more than 182 days in India, only then we go for the next two questions. That's why it's not a fair comparison between the British Airways, the air hostess case, because that she was a person who stayed in India for more than 182 days. Only then she gets into this. And then we decided that she was not a person resident in India because she stayed in hotels and had no permanent residence. But I think that's the next step. Suppose somebody is able to show that they were not in India for more than 182 days with the passport, straight away they'll go out of the flow chart. First stop. You see the flow chart, you'll understand. Let me quickly share my PowerPoint presentation with you so that, just a matter of revision and also understanding. Do raise questions because residence is one area where you could expect a question in the coming examination. Check out, I may be right, I may be wrong. It's all a probability. Okay, the probability is very high that you might be tested on residence. So try to do a little more research there and try to get some more knowledge there. Most of the time in the examination, it's not just about knowledge, but application. So just think in application terms. That's why this question was quite interesting, and I hope you are able to see the slide. So here we have it. So, as you can see, the first question we are asking, did you reside in India for more than 182 days? Now, if he says, no, I was not in India for more than 182 days, straight away go out, person resident outside India. He says, yes, only then we go for all these exceptions. The first exception being, did you come to India? Okay. Which is where Elia comes in, because Elia came to India, the air hostess Elia, she came to India. Then we asked her, did you come for employment? Then the actual answer is she didn't come for or on taking up employment. She came in the course of employment. So I think that is where the differentiation is. So no comparison. So this is to answer that question. If you do have any other queries you wanted to ask yesterday, but could not ask because of time, please feel free to post it onto the question pad, query pad. And I'll keep looking at it whenever I get a time. But then we will be getting today. So yesterday we also saw current account transactions, right? Now, one of the popular ways of testing this particular area is, as you know, there are 3 schedules. Current account transactions are freely permitted unless specifically prohibited. This is a basic knowledge. Current account transactions are freely permitted unless specifically prohibited. Actually, today, the earlier view was capital account transactions are prohibited unless specifically permitted. This still holds good, but with more and more liberalization, most of the capital account transactions have got out of the permission net. You are now freely permitted. So they slowly, but then it is not automatic. I hope you got the difference. Current account transaction, it's automatic. If nothing is said about it, it is free. Capital account transactions are prohibited. Something has to be said about it. That is why you have another set of rules called the foreign exchange management capital account transaction rules, where they actually give you freely permitted transactions, which are freely permitted. I will show them to you from the material because I don't want to put them onto the slide when I come to capital account transaction. But the point is, there are 3 schedules. First schedule is totally prohibited. Second schedule, you need the prior approval of a ministry of the government of India. Third schedule, there are limits. You have to remember the limit. Basically, it's easy. In those days, we had separate limits. Because for people traveling abroad, we had one limit, $30,000 and all that. Today, no. It's all straight away the LRS. There's something called the liberalized remittance scheme. And they say every financial year, you take $250,000. Today, it's $250,000. Somewhere in the middle, it became 70. So let's keep watching out. What is the current LRS limit? Always. Don't assume any number because RBI keeps changing this. But today, it's $250,000 per person per financial year for the whole thing. Whatever you're doing in these headings, straight away you got a cap of 250. Go up to that. If you use it, then that amount is reduced from 250 so that your limit gets reduced. It's almost like the government of India has given you a forex limit, and you can take up to 250, but only for these transactions or any other current account transaction. Do you see that? So there's an upper limit of 250,000 on current account transactions. If you want to go beyond 250,000, then you'll have to get permission from the Reserve Bank of India. Okay, so on and so forth. So similarly, you have other limits for other type of payments. So if nothing is mentioned here, if a particular transaction is not listed in these 3 schedules, then it can be freely undertaken. There's no limit on this. My humble view, the LRS limit applies because they've said any other current account transaction. The last item, the 9th item there says any other current account transaction, which means there is a cap in terms of LRS, which I think is pretty good. 250,000 US dollars. Just go figure that number. I mean, for you and me, I don't know. For me, it's a big amount because I'm a poor man. But I'm sure for a high net worth individual or an NRI who's earned in dollars and comes to India, this may be chicken shit. But then, at least he's got that. He can go on, and if he wants more, he has to go through his authorized person, tell why he wants it, and generally it's approved, not a problem. The authorized person can take a call on that. We will revisit LRS when we come to capital account transactions. The reason is the LRS limit is not only for current account transaction. The LRS limit is a sort of a blanket limit. It's applicable to all your transactions. I'll explain this when we come to capital account transactions, which I'm going to do very shortly. So we saw what was a current account transaction. If you recall, the definition of current account transaction, the definition was a current account transaction is one which is not a capital account transaction. And then, just to give us clarity, they gave us about 4 items, which they said are examples of current account. They are included, but there could be more. So current account is a wide open part of the universal set of forex transactions, right? So wide open set. But then capital account transactions are defined. You're going to see a definition now. So if it doesn't fall within this definition, then it becomes a current account transaction. So I have made, see, I'm not giving you the definition here. The definition is in this diagram. The way you read it, look at the blue arrow and the black, twisted arrow, and you will get the logic. I think I put the arrows wrong. Yes. Assets or liabilities. Capital account transaction means any transaction which alters. So the word used here is alter. So the transaction should have the effect of changing. Changing includes creation, destruction, and modification. Add, modify, delete. All the three functions are included in the word alter. Something was not there was no share in existence. You went abroad and you issued shares. Capital account transaction. It's an alteration of a liability. Okay, outside India. You are creating a liability outside India. Capital account transaction. You are borrowing money. Capital account transaction. You are creating a liability outside India. Okay. Whatever. You are buying a property outside India. Capital account transaction. Because you are creating a asset. So fairly simple. So any transaction which alters, now you have to follow me. There are two options. The first, let's take it from the right hand side, my right hand side, or if you're looking at the screen, your right hand side. Just look at the box there. A capital account transaction means any transaction which alters, right hand side box, assets or liabilities, including contingent liabilities outside India. Now follow the twisted arrow of a person resident in India. So one is the asset or liability, including contingent liabilities outside India, and it is being altered or created by a person resident in India. Now you notice the peculiar point here. For a person resident in India, when he tries to alter an asset or liability, it includes a contingent liability. For example, if a person resident in India is giving a guarantee in respect of a loan borrowed by a person resident outside India. Are you with me? Simple example. A Limited has a subsidiary, AB Limited, AB Inc., let us say, which is incorporated in the state of California. Okay. For possibly the purpose of startup or whatever. Okay. The point here is AB Inc. needs money, and a bank from India, say the State Bank of India, is willing to give the loan in California, provided the A Limited, the Indian company, gives a corporate guarantee. Simple. A Limited gives a corporate guarantee. Now you might say, after all, A Limited is giving a corporate. A Limited is a company incorporated in India. The bank, State Bank of India, let us say for the safety, because SBI can do this and does do it, because SBI has two branches, to my knowledge. They have more also, one in New York and one in Los Angeles. So the point here is, if they decide to give, they can. So they can extend facilities to AB Inc. But they will do it only if A Limited gives a guarantee. Now A Limited gives a guarantee to AB Inc. No problem. But then both are PRIA. State Bank of India is a Indian bank incorporated in India, and A Limited is a company incorporated in India. Where is the cross-border implication here? The cross-border implication is AB Inc. is a person resident outside India. Why? Because it was incorporated outside India, because it's a Californian registered company. So obviously it's a person resident outside India. So a person resident in India is giving a guarantee with regard to a person resident outside India. That's all. It doesn't matter to whom the guarantee is given. Now it may be to an American bank or it may be to an Indian bank. But unfortunately, there is a bank in India called Indian Bank. So don't get confused. No? When I say Indian bank, I mean any bank which was incorporated in India. So unfortunately, there is a bank called Indian Bank in India. Okay. So having said this, you have a bank, an Indian company giving a guarantee to a bank incorporated in India, but in respect of a person resident outside India. Just be careful. This is a fantastic question in the examination. Just simply they'll put this together and ask you. And it is, incidentally, for your information, this is a capital account transaction. It is a permissible capital account transaction. The bank within the framework, see the authorized, it's up to the authorized person, because later on you will see that the State Bank of India is an authorized person. So they've got directives on this. Actually, that's the beauty of FEMA. Earlier, everything, including even payments for trade. Can you imagine? You imported goods and you had to go to Reserve Bank of India for permission. I'm not joking. That was 70s and 80s. And that's one of the reasons why nobody bothered. Only people who really needed to import imported. Because that we were more into conservation of foreign exchange at that time. Because it was a scarce resource. Today, no. Today, it's a resource like any other resource. We have enough of it, sometimes more, sometimes less. So it's a management issue. Again and again, I keep stressing it. It's not a regulation issue anymore. It's a management issue, right? So, I mean, that's how it should be for all of us, right? You start earning initially in your career, you earn not enough. Then if you put aside a little bit every month, and you're able to create a sort of a corpus, suddenly say around 30, 35, you find you are now in a beneficial position where you aren't worried about money, but rather you're worried about what to do with your money. So that is the difference. Money is no longer something that you need. It's something that you have and you want to know how to use it most effectively. We moved from that. So that's one level of movement in the maturity continuum where our Indian economy has moved up from 70s and 80s pathetic situation to 90s and 2000s onwards, where we are there. And now it's about management. Now it's about economic policies. Now it's about understanding how to make things different. Now it's about strengthening the rupee. And that's the only way we can do that, my dear friends. Go back to your the first ever chart I showed you. This is not an economics class, but then every one of us, if you are not sensitive to economics, you can't, today's world, you can't live. So you really look at it, the only way you can do that, the only way you can improve your currency is not by getting more and more FDI. Okay? Or you get your FDI in, take it out, earn more than your WACC on your FDI as a country. That's too much. Not many countries can do that. They get foreign money, then they take it abroad, okay, then they handle the risk and they earn a return which is at least 2% or 200 basis points more than their collective WACC. Very difficult. That's one strategy. It is a strategy, it's not a bad strategy, but having said that, the best way to do it is export. Make them owe you. So the more and more the world owes us, the better and better our currency is going to be. As simple as this. Sounds very simplistic, but then that needs something, which is what China is doing. It is exactly what China is doing. China has done this. Okay? Which is a bigger story there. We can do it. We are big enough. We have the talent here. Okay? So, problem. That's when economics and politics get married. The marriage is a bad marriage. Politics and economics get married. A bad marriage. What's happened? No problem. So let's come back to the definition. So assets or liabilities, including contingent liability, outside India are altered by a person resident in India. Right? Now on the reverse side, come to your left. Okay? Assets or liabilities in India are altered by a person resident outside India. Now here we do not find contingent liabilities, and that's fair because we aren't worried about a foreigner coming in and giving guarantees and creating contingent liabilities, because no problem, please do it because you owe us. But then you might ask me, why are liabilities then included? Because this is the catch for FDI. You are so happy getting money into India. The money comes into India, it's good because the forex is moving in. But then it's not coming in as income. It's coming in as loan or and please, you're all senior, final level students of the institute. Please, share capital is not an asset. It is the ultimate liability. Equity is the ultimate liability. So don't think that when you get something in as equity, it's good. Equity is the ultimate liability. Equity demands a higher return, right? It's so convenient to ignore it. Even for professionals like us, it's so convenient to ignore that equity is the highest liability and it's coming in and it's going to demand a whack. In fact, debt is easier. Okay, debt is easier. This is a bigger financial management paradigm. I'm not going there. I'm only saying liability is created by a when he gets when you borrow, right? You are creating a liability outside India. When you issue shares to him, he's creating an asset in India. Good. It's going to also, and you are also going to have to repay it one day or the other. So when a PRIA alters assets in India, when a PRIA, when a PROI creates an asset in India, we have a counterparty obligation to repay him. You have to be very careful. That's the point. Similarly, when a PROI wants to buy assets in India, you have to be very careful. Yes, especially immovable property. In fact, as of today, PROI cannot buy certain types of assets in India. You'll see that. Can't buy agricultural land. He can't buy plantation, so on and so forth. It's not possible. So, this is the definition of a capital account transaction. Moving with that, section 6 has been altered. I am giving the altered section. In the BOS material, you will find something which may not tally with what I am showing here. Don't worry. Okay, you might ask me, then where am I getting this from? Okay, I am getting it from the Act. But don't worry, it's there in the RTP. There is something called the RTP, which contains the new section 6. You can go and refer there, and I'm giving it to you here. So, section 6, don't get immediately excited, and of course, I've seen intermediate students do this a lot, and I don't think matured students like you will do this because you might have already gone through the RTP. See, the point is 6.3, subsection 3 has been omitted. 3 was a huge list. I will show you the 3 list in a different way in permissible capital account transactions. It's there in the material. Okay, elsewhere you can read it. Now, so now the new 6 says any person may sell or draw foreign exchange to or from an authorized person. So for a capital account transaction, suppose they put a full stop there, you might even question me, hey, you said capital account transactions are prohibited. Where is the prohibition here? Actually, there is a prohibition, but then what they are saying is you can draw, you can sell, but in accordance with the regulations made by the Reserve Bank in consultation with central government. Now, there is something called the Foreign Exchange Management Capital Account Transaction Regulations, which clearly give the permissible capital account transactions and prohibited capital account transactions. We may want to go there. Also, today FDI is freely permitted, but then this is subject to the ministerial policy. So each industry has a ministry. Now, when a particular ministry is involved, that policy is also important. For example, retail. Company may want to come in and set up a retail business in India. They can't because that segment is still not fully opened up. Oil and natural gas not yet fully opened up. Okay, which is why it will be opened up. Don't worry, it's going to happen. Railways are slowly getting opened up, but then FDI cannot come in. As of now, FDI cannot come in. So on and so forth. Then policies are there. Are you able to understand? There are policies being evolved in consultation with the respective ministries as to how much can come in and all that stuff, which is good. Okay, which is happening. But then one trend that we are seeing, I don't know how far that is right. Again, a comment by me. See, when Japan started its liberalization process, easily 40 years before us. 40 years before us, they started. So they got, but then they have a different problem, deflation issues there. But that's different because but then they had a very strict policy of anti-US policy because they were so pissed off with the Americans, but then they needed the Americans. See, that's unfortunate. So they said, you can do all this, but then anything you do, you'll need to have a local guy. You can't just like that come in and do whatever you want here. So that was different. That's why some of the Japanese corporations became so big and they used the opportunity to dump I'm using the word very dump, but not in terms of price, but in terms of quality. So they dumped quality at premium. I'm just using the word dump here because the word dump normally means to sell at a lower price. But then they don't do. In fact, they did it. In fact, Japanese products were cheaper than American products with better quality. Can you imagine this? So unlike the Chinese products, which are cheaper, but then they come up with a quality constraint. Then not so Japanese. Okay, the Japanese story is a bigger story. We are permitting people to come in as and when we want. They want, do whatever they want. I don't know. This needs review, which is why most of the time we are throwing the baby out with the bathwater. Foreign direct investment is good. American companies or any company, ideally European companies coming to India is good, but with conditions, with monitoring, with review. Okay? Nothing wrong. That is how we can grow. Otherwise, we cannot grow. If you want growth, that is how it's going to happen. If you don't want growth, you want to go back to the old life, but you will go back, yeah, no problem. It can't be both. You can't have your burgers and your pizzas and your Western lifestyle and an ancient Indian heritage. Or you need to somewhere learn how to merge the two and live in both the worlds. If you don't learn this, you're going to be in deep shit because the Japanese have done this. Their tradition is safe. They are also modern. So I'm somebody at home and somebody in office. Nothing wrong. This dichotomy is how we survive. Without this dichotomy, you are in for deep psychological shit. Okay? Somewhere we need to get used to this. Okay? And beating ourselves with guilt is where we are getting into trouble, is what I feel. Okay. So the section begins with saying any person can draw. Good. So matters in respect of which RBI may specify permissible transactions are there. So there are transactions which are permissible, and RBI can also give you the limits. Now it is under this category that the Reserve Bank of India has created something called the ECB norms, which we are going to see. The ECB norms, which are very important. I'm going to take you through them. At the fag end of the session, about an hour, it will take. It's quite long and it's quite boring, but then we'll have to do that. So the only exception is there is no problem if you draw foreign exchange for amortization of loan, for repayment of loan, or when you're losing money abroad on investments, that amount you have to pay the loss on depreciation of direct investments. There, a drawal of foreign exchange is permitted because nothing can be done about it. So, without prejudice to the provisions of this section, the Reserve Bank may by regulation prohibit, restrict or regulate establishment in India of a branch, office or other place of business by a person resident outside India for carrying on any activity relating to such branch or other place of business. So, there are separate rules for branches or other place of business by a PROI in India, as I already told you. There are certain restrictions. Now, please note 6.3, which is there in your material, has been omitted. So, please do not waste your time. Okay, but 6.3 survives. What I'm now going to do, which I've never done before, but I want to do it here, is take you through the shall I say, the institute material itself, because it's easier than thing. It's just want you to see the permissible transactions. Okay, this is the Board of Studies material that I'm showing you here, right? I think you can see this. Take the Word document out. A Word document here that I can search. 1 minute and I'll do this. Yes. Here I can search. So you have. Can you see this? I think you can. Most of you can. And you already have it with you. I'm not trying to, So these are, as we already saw, Section 6 permits the Reserve Bank of India to give permissible transactions, right? Now, so the RBI has issued, please note this is regulation. The RBI, in consultation with the central government, has issued what are known as foreign exchange management, permissible capital account transactions, regulations. Please note, the current account transactions are rules. They are prescribed by the central government, by the Ministry of Finance. Whereas these are regulations. They are promulgated by the RBI in consultation with the Reserve Bank, in consultation with the central government. Now there are two schedules here again. Okay. Schedule 1 is permissible transactions for a PRII. PRII is person resident in India. So now a person resident in India is permitted to invest in foreign securities, in foreign currency loans. There are regulations for this. It's not that you can go straight away and do it, but there are regulations, but you can. Transfer of immovable property outside India. Guarantees issued by a person resident in India in favor of a person resident outside India. Do you remember my example of AB Limited and AB Inc. and A Limited? Guarantees issued by a person resident in India. So it's permitted. Okay. In all these cases, now you might ask me, so it's really permitted. So can I go and do it? Remember Section 3. 3 says you can do all this only through an authorized person. Now you go to an authorized person and you tell him, you know what, I want to transfer 200,000 to my account in Hong Kong. Oh, really? Why? You say, you don't ask me all these questions. Why? Sorry, the authorized person has the right to ask you why. You can't tell the bank, you can't ask me why. So the minute the transaction is in foreign exchange or it's having a cross-border implication, the authorized person, which is your banker, has a right and a duty. It's a right and a duty to ask you why. And if you tell him, you know what, I'm going to do a lot of speculation in options, so I'm going to use Hong Kong as my base, and I'm going to do speculation in options through, I'm going to set up a sort of an arbitrage account there, and I'm going to buy and sell on NASDAQ. Oh, wow, that's a great idea, but not permitted. Sorry. Because there's a directive which says portfolio investments outside India are not yet permitted. When you come to ODI, you will understand this. See, there's a separate set of rules called overseas direct investment. You can take money out of India for investing in a company as an investor. If you want to do speculation, if you want to do portfolio management abroad, as of now, not yet allowed. As of now, don't worry. See, once we grow, you will be permitted. You will have the right not only to lose your money in the Indian stock market, you will have the wonderful right of losing it in NASDAQ also. Don't worry. That right to lose your money will not be denied to you. Very shortly, the government will permit you to take your money out and lose it. Okay, don't worry. In the meantime, start losing it a little in the Indian stock market by taking calls based on press, based on Google, based on what you read about a company. Just buy it, then see it going down. Okay, no problem. Don't do any. No, though we are all chartered accountants, though we are experts in valuation, and we should be able to do intrinsic valuation, we don't do it. Huh? Like any other Tom, Dick, or Harry, we just listen to what somebody is saying, and then you know what? That company, it's a great company. I'm going to buy it. And then it goes up. Or some astrologer type of a stock market expert who foolishly does some nonsense in charting, and then he says, this company, this share will go up. You know what? I bought it, and it's went up. True. Wait and see. So as chartered accountants, we are extremely competent in making intrinsic valuations, in predicting cash flows, in understanding WACC, in understanding risk. But we don't do that. I hope we do. If you do that, that's a different portfolio altogether. That's a different portfolio. That is an unshakable, unsinkable portfolio with proper timing and all that. Sorry, again diverging. So anyway, it's a good thing that we are not allowed to go abroad. But then how long? A day will come when you'll be permitted, so that we will hear stories of people losing money in the NASDAQ. No problem. So foreign currency loans raised in India, transfer of all these are permitted. Export, import of currency, loans and overdrafts. Please remember, all these are permitted subject to the regulations. Now, as a chartered accountant, should you know these regulations? You should. Because as a finance manager of a large corporate, you will be dealing in forex. So when you go to the bank, of course the bank manager will educate you. Believe me, most of the bank managers in the ECD function, the exchange control division of any public sector bank, are ultimate experts in forex. In fact, my training company, where I conduct training across the country, we have a specialized program called Forex Risk Management, which is conducted by two bankers. One of them is a chartered accountant, the other is a cost accountant, but both are core bankers. They have put in solid 30 years of banking experience. They conduct this program for me, which is on foreign. They are experts in FEMA. They in and out. You tell him, he'll tell you. So that way, the expertise is sitting in the bank. But then, it's good if you know it. Good if you know the basics at least. That what you can do and what you cannot do. The actual procedure, sometimes they share it with you. Even that you can know. If you know a little, it's good. Which is what the institute expects you to know. You should know what can be done, what cannot be done, and how it can be done. Okay. So these are all permissible transactions. I didn't want to put it on a PPT. I just want to show you here itself. Maintenance of foreign currency accounts, taking out of insurance policy from an insurance company outside India, loans and overdrafts by a person resident in India to a person resident outside India. ECB norms are for inward flow. This is about outward by a PRI. Remittance outside India of capital assets. The LRS is one beautiful way of liberalization. Okay. Undertake derivative contracts. Wow. As of now, prohibited, but it's going to be permitted. Wow. You will be able to write options on NASDAQ. Wow. So, now the list of permissible classes of transactions made by PROI. Now, when a PROI wants to invest in India, okay, he wants to issue a security or contribute to the capital, he can do that, subject to the FDI, extant FDI norms, the foreign direct investment norms. Acquisition and transfer of immovable property in India by a PROI, as of now, prohibited. Not possible. I mean, okay, can I never do that? You can, but it's not freely permitted. You have to go to the RBI, get special permission, and then do it. Guarantee by a person resident outside India in favor of or on behalf of a person resident in India. Okay, permitted. Import and export of currency notes, deposits. Okay, so when an NRI wants to make a deposit in India, you would be guided by those regulations. Okay, NRIs do get some benefit because we want foreign exchange. Earlier, we used to treat NRIs as God. NRI, Pardesi, not Pardesi, what is that? Pardesi, yeah, Pardesi. So they are God. They go abroad and they give us, they are like gods for us. I don't know today how far they will be gods, okay? Because we got every opportunity here in India. So possibly we don't have the type of lifestyle, good show. But then, when I was in Australia, I've seen people on the road, whites, not trying to distinguish here, but I'm saying I was surprised. And I asked my nephew, hey, what's happening here? Why are these guys, these are whites, why are they on the road begging? I thought when you come to a developed country, there are no beggars. He said, uncle, they are not beggars. Don't use the word beggars. They are homeless. Oh, okay. That's a nice word. They are homeless. So what happened to them? You see, they lost their job. And once you lose your job in Australia, you have nothing. Because you have to walk out of your house. Because your house is, see, unlike India, there's no equity in the house. The whole thing is leveraged. So if you don't pay the due date or dues, the company will come and send you out. Maybe 3 months. 4th month you are out. And this guy walks out with what he has on his hands, personal effects, sits on the platform, puts, I'm homeless, help me. And he gets a dole from the government, which is sufficient for him to eat and live. But no house, nothing. That's why they are called homeless. Okay, I'm not trying to tell you. So it's quite possible. So if something is going to go wrong, it can go wrong as well in America as in India. If something is going to go well, it can happen here also. So, great. So these are basically the permissible capital account transactions. Just try to go through it. And remember, this list was actually in 6.3. They've removed it. They've removed it. Coming back to my PowerPoint presentation, let us continue with our discussions on capital account transactions. A PROI is prohibited from making investments in India in any form, in any company. Now, this is not a blanket prohibition. Certain things he cannot do. Yep. A PROI is prohibited from making investments in India in any form, in any company, partnership, or proprietary concern, or any entity, whether incorporated or not, which is engaged in or proposed to engage in chit fund business. So you can't get NRI money or PROI money into chit fund business. A Nidhi company, agricultural or plantation activities. Okay, as I told you, you cannot buy agricultural land. In real estate business, so which simply means a PROI cannot buy a vacant piece of land. Okay, or nor can he buy land and say, I'm going to construct a farmhouse. So these two are not allowed. But then be careful, the word real estate business, there is a specific exemption. What is that? Shall not include development of townships, construction of residential, commercial premises, roads, bridges, and real estate investment trusts. So which means genuine, shall we say, equity coming into construction and infrastructure is allowed. Why equity? When it comes in, should not be that they cannot directly invest in the land, but they can invest in a company which is developing residential complex or a commercial complex. Nothing wrong. That's allowed. That's actually part of FDI anyway. So even we had a client who had a huge tract of land where they wanted to develop a SEZ, then decided to change their idea because suddenly SEZ went and the recession struck. Nobody, post 2009, nobody wanted to set up any new businesses, and that too in SEZ. So somewhere the land was sitting on a prime piece of urban area, and therefore there was a huge premium for housing. So we went to the RBI and got a special permission, giving the project and all that for a residential house complex, a huge residential house complex with something like 3,000 houses. That was the size of the place. So they gave the permission. In fact, the valuation, from a valuation perspective, that particular company, when we valued it, was coming to something like, that time, if I remember right, it was 1,200 crores or something. Because of when the commercial FSI was taken into account, the potential for growth. But then, of course, it went off, but then the valuation didn't realize because subsequently the real estate started stagnating and all that. So, to clarify, a PROI cannot buy land and do real estate business, buying and selling land. He cannot buy land to construct a farmhouse, nor can he construct a farmhouse, or it construct a farmhouse. Okay, but they can invest in equity, provided that company or entity is engaged in construction, townships, development of townships, etc., permitted. Also, trading in transferable development rights. So, TDRs, for example, if you see when you are having some environmentally friendly activities, automatically in cities like Mumbai and possibly Delhi, you will get what is known as TDR, transferable development rights, because you can achieve more FSI. Suppose for a particular area, there is a particular floor space index, and you can only go so many floors, or you can, given plot of land, there is a ratio called FSI, floor space index. So so in valuation that's so easy. Once you know the location, once you know the size of the land, automatically you put the FSI, and you will know that how much square feet can be achieved on that land. Okay. Now, but then when you have a TDR, because you did something good, because you had some environmentally friendly things happening and you're green, so you get a TDR, and that the TDR enables you to take little more FSI, a little more square feet than the FSI permits you. So that TDR is available, it can be sold. This is similar to carbon credits. When you have a carbon credit, you can trade in the carbon credit. This is similar to that. But then a PROI is not allowed to trade in TDR. Now here's a question from the recent exam, May 18. So there's a gentleman called Mr. Banda, a software engineer. He's of Indian origin. He took employment in India and he's a resident of USA for a long time. But he desires to acquire a farmhouse in Munnar, Kerala, and to make an investment in a Nidhi company, registered as Nidhi. Remember, we saw the Nidhi companies in an earlier lecture. So, and to make an investment in Rose Real Estate Limited, an Indian company formed for development of township. So he's got three things to do. Possibly he's asking you consultation over the internet, email. So you're getting the mail. The first thing you will do, first thing, my dear friends, you will do is send him your bank details. Ask him to transfer the fees. Okay, and then and only then will you reply. And what reply are you going to give? With reference to the FEM, he wants to know whether there are any restrictions. Okay, I'm sorry, that unsatisfactory part, it will come later. It's a twin question. I've split it. After I teach appeals, we will talk about Mr. Unsatisfactory. Okay. Now, let's now only worry about Mr. Banda. So Banda means somebody who is bound, binding. So this gentleman is bound. Banda is bound to our country, though he is a citizen of US. I don't really see trend like Mr. Banda. It's the other way around. LRS, people are taking money out and buying in US or Australia. Really don't see. And parents of children in US also, they are not interested in India. So they are selling off all their assets in India and transferring it to Australia or US or Ireland, where they want to go and settle down there. The parents also. So I really don't see reverse movement here. But then Mr. Banda is a very nice gentleman. But he wants to do certain things. I don't know if he can do them. Can he acquire a farmhouse in Munnar? No. As we already saw, it is prohibited. Not a farmhouse. No way. Maybe he can buy a house, but not a farmhouse. No agricultural land. No way. Can he make an investment in the Nidhi company? No, he can't. Okay. Prohibited. Simple. It's prohibited. Okay. Remember. Can he make an investment in Rose Real Estate? Now be careful. The word real estate is defined for this purpose. So what does Rose Real Estate want to do? If they simply want to buy land and sell, no way, Banda cannot invest. But since they want to develop a township, it is possible that he can invest. Because real estate does not include development of townships. So there is a general prohibition on real estate, but when they want to develop a township, you can still do that, is what I feel. Similarly, if Rose Real Estate or Rose Construction Limited wanted to engage in construction, they can do that. Okay, Mr. Banda has a brother called Mr. Unsatisfactory. We will talk about him later when we come to another part. While I'm there, it's not inappropriate for me at this stage to tell you about the way questions are asked in the law papers. You see, basically, Institute wants to take you to application rather than, shall we say, purely vomiting your knowledge. So it's not a test of how much you can remember. It's a test of how much you can remember and apply, how much you connect with things. So most of the time they would ask you only practical questions, but then you have to be very careful. This Mr. Banda's case is a good example of a practical question. Usually, there are three types of questions you are asked. One is a pure practical question, especially in 188 or 186 and all. You will find they ask you, give you a complicated case, sort of a brief description of relationships between companies, borrowings, stuff like that. And then they ask you whether applicability of the act and stuff like that. That's a pure problem question like this, where there is a set of facts. You have to appreciate the facts. You have to remember the law, apply the law to the fact, give your conclusion. Did you see the 4-step process here? So if your answer can follow 4 steps, be great. You read the facts, appreciate it, represent it so that the examiner knows that you've understood the crux of the issue. Okay? Then this is where you are tested for knowledge, where you remember the law. See, there is a law applicable to this. That needs to be written. And that's the meat of your answer. That is missing. Believe me, you're not going to get marks. For example, if simply you write, for example, in this case, Mr. Banda. So 1, Banda cannot buy farmhouse. 2, Banda cannot make investment in Nidhi. 3, Banda can make investment in Rose Real Estate. Wow! You are Allahabad High Court, yeah. Even Allahabad High Court will give a reasoning for that decision, right? Even Allahabad, if you write a judgment of a High Court, And I strongly suggest that. I'm sure in income tax you would have read, when you read a judgment of a high court, remember, they would first give the facts leading up to this dispute. Then they would detail discussion on the law. Then finally they will say the last one paragraph or two paragraphs would be the ratio decidendi, where the court would say this is what we think is right. This is exactly the format you have to use for pure practical questions. So finally you write your answer. That is that single line, so that the examiner sees that first and he says, okay, not bad. He's got the point. Now let's see how he came to the point. So chances are you will get 90% of the marks reserved for that question. For example, this question has 6 marks. 6 marks will be divided as 4 and 2. 2 for the appellate part and 4 for this. So out of this 4, the chances are very high if you follow this format, 3 to 3.5. 3 to 3.5. So of course, you have to sequence it. You have to write what are the permissible capital account transactions, rather what are the prohibited transactions, or at least you should say, under this FEM guideline, these are prohibited. And then say, therefore, blah, blah, apply. See, this rule need not, this 4-step process need not always be the same. Sometimes the application and conclusion could be a single line. You can adapt, but that's how you have to approach it. Next, you have a type of a problem which I call a problem question. It's worded as a problem question, but basically it's a theory question. If you look at this unsatisfactory part, later on you will see Mr. Unsatisfactory wants to make an appeal. What is the procedure? So it's a simple theory question on what is the appellate, instead of asking you what is the appellate procedure under the Foreign Exchange Management Act, they say, they give you names and they give you a story. So don't waste your time. The minute you see what it is, don't waste your time. Don't write Mr. Unsatisfactory, blah, blah. Or just one line saying Mr. Unsatisfactory is advised as follows regarding the appellate provisions under FEMA. Then write the answer. That's all. It's a theory, but disguised as a problem. Finally, of course, you have the pure theory, where those days they used to ask you straight away, what are the grounds of disqualification of a director? Wow, that's gone. Possibly it still survives in university examinations. Okay, but in professional examinations, this type of a question will not be asked ever. Okay, so then of course you have the open book and all. This is for closed book examinations. Open book needs a different category of a different strategy altogether. Okay, so now we move on to prohibited capital account transactions. We saw that no person shall undertake to sell or draw foreign exchange to or from an authorized person for any capital account transaction. Okay, see the general prohibition here? Correct. That's why they say you can do it subject to regulations. Now, one important exception they've given you. A resident individual may draw from an authorized person forex not, this is in section 6 only. I'm still in section 6. A resident individual may draw from an authorized person foreign exchange not exceeding $250,000 per financial year, or then as Reserve Bank may change from time to time, which is why I said keep looking at the LRS limit. As of now, it's 250. I'm sure when you're writing the examination in November or June, it will still be 250. But just in case you're writing in June of 2021, please wait for the RTP. Institute has extremely great faculty and academics who sit there and they do research and they give you the RTP. So wait for the RTP to come. Once it comes, refer to it. So there you will have the right one. So don't worry about that. If there is any change, Institute will keep you informed. So long as you are a registered student, you are entitled to this knowledge and the Institute will give it to you. So don't worry about that. Or else you do your own research. Google is always there. But as of now, it's 250,000. So not exceeding 250,000, a person may draw for capital account transaction also. Now, please remember, it's not an additional 250,000. It's the same old 250,000. So the original LRS limit of US dollar 250,000, which was available under Schedule 3 of the current account transaction rules, is subsumed in this amount. So you have a choice. You got $250,000. You want to take it out for capital account or for current account. Suppose you take it out for a capital account transaction, which you can. So you take it out and you buy a small cottage in Sheffield and you settle down in the United Kingdom. All the good for you. But then That 250,000 is closed that year. Where the drawal under this head exceeds the LRS limit, then further drawals, even for current account transactions, require approval. Because that limit is for all, both current account and capital account. This is for you to understand. And now, this amount that you are drawing, 250,000, should not be used for remittance directly or indirectly to countries notified as non-cooperative countries by Financial Action Task Force. Just go and Google this. You'll see a whole list of countries. Chances are you would want to go there. Most of the people who do money laundering, who do nonsense, criminals, they want to take their money and settle down in these so-called tax havens. You can't, because this money cannot be taken to FATF blacklisted countries. Okay, a lot of countries, whole lot of them. All of them are great places to go as a tourist. But if you try to take your money out and settle down there, you can't use this route. Okay, you can't use this route. The banker will, the minute you tell him where do you want to take this money to, and then you give him one of these countries, St. Kitts, Panama. Panama is a great place to settle down, but then you can't, because Panama is one of the FATF blacklisted country. Okay, but what hypocrisy? Theodore Roosevelt, dug the Panama Canal, and he created Panama out of Bolivia. So he took it out and he said, this is Panama, and Panama was created only for money laundering, okay, by US corporations which wanted an offshore, where they could do things without the control of the American law. And the US government knew well enough that they were creating Panama only for this. But then you'll also see that this is a blacklisted country. Panama is one of the blacklisted countries. It's a great place to go to, believe me, as a tourist destination. Panama is great. Then it's also the tax haven where the PMLA, where you studied, the money that was earned from unlawful purposes, okay, bad money as we call it, goes to Panama, gets stored in Panama because no questions asked in Panama. Okay, now here is an example. A PRIA or a PROI may, for example, a PRIA, okay, may hold, own, transfer or invest in foreign currency, foreign security or any immovable property if the same was held or owned by such person when he was PROI or inherited from PROI. So, simple. Mr. G was a resident of USA, citizen of USA, blah, blah. Then he decided he will as well settle down in India, spiritually advanced and all that, he comes back, whatever. Now the point is, this guy, after he comes back to India and he becomes a PRIA, because he stays for more than 182 days, straight away he's a PRIA, right? For an uncertain period. So he's a PRIA. So he comes to India, no doubt. If he stays for more than 182 days, and in the year in which he comes also, he is coming for an uncertain period. He's not going to go back. So he's a PRIA. But then, let's say he still has a house in Connecticut, which he bought when he was a citizen. Now he says, I'll sell that and bring the money back into India. He can do that because that property was acquired by him when he was a PROI, right? Or maybe it was built by his father and he inherited maybe his father went out of India. And if you look at the example of this Kamala Harris, this lady, we are so proud of her. Believe me, she lost her connection long, long ago. Her mother went. Kamala Gopalan went long, long ago. Almost 10, see, not even my sister's cohort. My sister went in 80s. Kamala Harris' mother and all went even earlier to US. So my sister is today a citizen of the United States. My nieces are citizens of the United States. They are not Indians, right? They are not Indians. They are people of Indian origin. In that sense, calling them Indians is not fair because they owe an allegiance to a foreign country. Tomorrow, if there is a war between US and India, they will fight for US. Rather, they will have to fight for US. They can't fight for us. Sorry. Hurts, it hurts. But that's how it is. Okay? They are citizens of a foreign country. We can say that they are of Indian origin and take some credit for it. You and I have no business claiming credit for Kamala Harris because what did we do for her? What did we do for Shyamala Gopalan? Okay, she went off. She did research. She married Harris. Okay, again a Caribbean. Then they created these children and they are US citizens. Yeah. Of course, both of them had to flee from countries that chased them out, right? For different reasons. And America gave them the sanctuary that they needed and gave them the ability to grow. And then Kamala Harris comes. So what? Just because it's an original country of origin doesn't mean that you have to have. Believe me, this is very, very important to understand. We claim, but they don't. They need not. Because what did we ever do for them that they should feel proud? Okay? Except that origin. Okay, roots, nothing else. We come the same way that the black African American population, Indian population is they went out of India. Except that the American government had this beautiful idea of Lyndon Johnson had this beautiful idea of encouraging, instead of just allowing immigration of lower level servant category, he said, I will also let in people who are brilliant. That was the gap, the opportunity that Indians used, and we left. Those of us who had the brains to do it left for many reasons. We left for many reasons. Okay, this country did nothing for them. For this country now to claim that they are from India. Okay, just for your information. So here is a classic example. Unless at a later stage they suddenly discover, just like the African Americans want to connect back with their African origin, they want to come back to India and connect. That's a different thing. Just like that, you can't say they are Indians. No way. Kamala Harris is an American. She is not an Indian. So a PROI may hold, own, transfer, or invest in foreign currency, foreign security, or any immovable property if the same was acquired, held, or owned by such person when he was a PROI or inherited from PROI. Same logic, reverse. So this guy is now a US citizen. He has a Tarawad in Kerala, a house which they sell. So he gets a share, no problem, because it was inherited by him from, it should be PRIA there, because I copied it. It says there's a confusion there. So just there's a confusion there. I will correct this part. Actually, this should be when he was a PRIA or inherited from a PRIA. Cut and paste. No problem. So moving on, let me see if you have, before I get into authorized person, because I made certain emotional statements about who's an Indian, who's not. I'm sure some of you would have also emotionally related. No, not really. You're all very matured students. Ms. Bhavati is asking a good question on gift. When a resident transfers thousands to an NRI relative as gift, then it is a capital account transaction. I'll have to go back and check. Subject to that, let me quickly react to this. See, in permissible current account transactions, do you have, let us see. See, if you really look at this, gift or donation is actually a current account transaction. I don't know what this means. Sorry. When a resident transfers $1,000 to an NRI relative as gift, then it is a capital account transaction for NRI and current for residents. It's a current account for PRIA. Correct. It is a current account. Clearly, it's a current account transaction. There you don't have a doubt. For a person resident in India, giving of a gift is a current account transaction. Okay. What I'm asking is how it becomes a capital account transaction for the NRI. I'm not able to see the logic, because once I get it as, see, the point is simple. Does it go into my income statement or does it go into my balance sheet? The cash will go into my balance sheet, right? But the gift as such, the nominal account part will have to go into my income statement, right? I'm not going to create a liability there. I don't think I will. Once I get the gift, that's it. I've got it. So I'm unable to understand why the institute has given this type of a comment. Maybe I am going to review that material. At that time, I will read it. And if whatever I think. As of now, let me assure you, gift or donation is a permitted current account transaction from the point of view of the PRII. And I'm not seriously worried about what it is for the PROI, because why am I worried? What goes out is more important for me. And when it goes out, it is a current account transaction. No doubt about it. That, that unfortunate gratuitous comment that it is a capital account transaction for NRI, I don't know. I'm unable to relate to this. I don't really see whether it's relevant, but then gift is a current account transaction. There the institute material is absolutely correct. Okay. The transaction is current for the resident. Obviously, because once you give the gift, it will reduce, right? You could say it's going to be reduced in a capital account, but then it will go into your income statement. If you are an individual, it will go into your income statement as an expense and it will be written off, right? So ultimately it will reduce. See, everything will add to the capital or reduce the capital, but that's not the point. Initially, where does it go? Does it go directly to the balance sheet or does it go to the P&L account? In this case, I honestly believe a gift or donation for an individual would go into the expense statement first, and then it will be expensed. Okay? So it will have to come out of his income. If his income is not sufficient for this, then there will be a negative there, which would come out of the capital. But that's a concomitant issue. To begin with, it goes on the payment side of the receipts and payment account, okay, for an individual. So therefore, it's current account, and it's permitted up to $250,000 you can give. The NRI can give. Yes, Ms. Ambika, LRS is applicable to capital account transactions also. There is a point of this. But then the limit is a common limit. That is what you have to understand. The LRS limit of $250,000 is a common limit for current account and capital account. Totally, you have only $250,000, which means in a limited way you can do capital account. But then you can't use LRS for anything and everything. My dear friends, the LRS form is very, very restricted form. Many clients come to me saying, sir, I saw Google, there is something called liberalized remittance scheme. I can take any amount I want out of India. Yes, you can. Go to the bank, ask them to do, what do you want to do? No, I want to do this. You will say something which is prohibited. Okay, chalo, no problem. Don't waste my time. I've got better things to do. Just go to the bank. After all, it's in Google, right? It's going to happen, right? Okay, so the bank has to do this, right? So go to the bank, tell them that you want to do this, and if they let you do it, Baba, do it. No, what do you mean? So first you go. Then he goes. Then he sits with the banker. Then 2 days later he calls me, Srikanth, you seem to be right. They are not permitting everything. How they can do like this? This is a fraud of the government. Again, don't waste my time. My job is to learn the law and advise you. Not, of course, sometimes it depends on the fee. Okay, I can listen to whining and all this crying from a client who pays me. No problem. If that's part of the job description, please, my shoulder is readily available to you. But otherwise, sorry. Okay, so I'm sorry, I'm being so mercenary, but that's about it. If you want to be very spiritually advanced, you have to start by being mercenary. Okay, spiritual advancement does not come to poor people. Okay. If the goal of somebody is to become spiritually advanced, somewhere he has to completely undergo his karma. And that includes earning wealth, if that's what your karma is, and you have to then say enough and go. Okay? So sometimes even spiritual advancement demands a mercenary outlook. Okay? So the answer, good questions from Ms. Ambika and Ambika. Yeah, that's a good question. Again, Ambika, let me read your question. It's very interesting. If PRII transfers gift in INR to PROI's Indian account, then PROI converts into foreign currency. Does it come into kafama? It does. You might ask me, how will it be tracked? Simple. The minute a person becomes a person resident outside India, his local current accounts will automatically become what we call non-resident ordinary accounts. So that is also governed by the FEMA regulations, okay, which is not there in your syllabus. It's not there in your syllabus. It's not in the institute material. Please read the exclusions. They are very clear. What is in the Board of Studies material is enough. So no, I'm not going there. In those days, I used to teach that also, but not now. So there is a separate set of FEM regulations for deposits. So one of the deposit rules is NRO. So there's some, if you are you are making a payment into an NRO account of a person resident outside India, even though it is an INR, you are making, go back to section 3. This is a classic section 3 situation where 3 prohibits, right? 3 is the basic section. Yesterday when I taught you, I taught you 3. See, make any payment to or for the credit of any person resident outside India in any manner. Okay, so that is covered. So this is a classic example of this. Okay, giving a gift. Then why are you so keen on giving gifts to NRIs? Yeah, your goal should be to get gift from NRA, huh? Which is also permitted, not a problem. You can always take that's, and there absolutely no problem in that. Huh? There is no, even except that in income tax you might have to pay. Income tax 56. One you might have to pay, unless it's a blood relative, you might have to pay tax. But for that, look at, even though it's a gift, you'll have to pay tax on it. But then look at getting gift from NRA. Don't give gifts to NRAs. They already have enough and more. Let's look at getting something back. Okay. Good questions. Keep the questions coming, because that's one way I know that I'm not talking to my laptop screen. Huh? That's only way I will know that I'm not talking to my laptop screen. Just assure me that I'm speaking to blood and flesh human beings out there listening to me, emotional human beings. Sometimes I'm also a little emotional, but then if you're not emotional, then you're a dead body. Yeah? Cannot show emotion, cannot feel emotion, a dead body. So nothing wrong. And believe me, in some of my GMCS workshops, sometimes I used to tell people who are qualified chartered accountants who come for the GMCs, I tell them the code of conduct, I verified it. Nowhere in the code of conduct it says a chartered accountant should not have a sense of humor. Nowhere does it say that a chartered accountant should not have a sense of humor or emotion. We are human beings. Then only we are chartered accountants. So don't think that suddenly somewhere after becoming CA, I see people, Mr. Srikanth, according to me, this is blah, blah, blah. Right, you are a chartered accountant. Great. Hats off to you. So what? You are a human being. I'm a human being. Yeah. Let's start at that level and then move forward. Okay. Now we come to another important person in the FEMA framework, which is the authorized person. Now the word authorized person is used because it covers 3 types of people: the authorized dealer, the money changer, and the offshore banking unit. Means an NBFC or a bank takes a license from the Reserve Bank and sets up a banking unit in a foreign country. I gave you the example. The State Bank of India has a branch in New York, such things. They are also bound. They are also authorized persons. Though they are abroad, they are bound by Indian law. In the same way that Citibank is bound by US law. Which is why, when you have an account with Citibank or a facility with Citibank, you sign off on a document called FATCA. Check out. Next time, if your company has an account with a foreign bank, they will, once in a year, they'll come to you with that huge form. It's a simple form. Once actually you read it, most of it is not applicable. Okay. When you go through all the nonsense of the wordings of that form, it's bottom line nothing. Okay. You will come under one category, which is, you will tick it and you will say everything is fine. I'm not getting any money. They are more concerned, about US, is about the money laundering. See, so all countries are worried, and each country has to protect itself. So they want to be sure that the account which is being operated is a genuine account and not an account started for money laundering. Now the beauty is every responding country bank will do it. For example, the bank in India will do it for India when it's abroad, and the bank from a foreign country will do it in India with Indian citizens. They'll take a FATCA and all that. All that is good. But who's going to control? We already saw Panama. Who's going to control St. Kitts? Who's going to control the Cayman Islands? There you go and try to do your FATCA thing. It won't work. They will not bother. They have so many accounts there, and they won't reveal who it is. Okay? They won't reveal who it is. They will not tell you in whose name. Or why go to these places? There are countries in Africa which are actually not blacklisted countries, like for example Nigeria or Nigeria or the entire western coast of Africa. You have countries that are not blacklisted. They are not FATF blacklisted countries. But sorry, they also, you can do anything you want there. Of course, but by the time you get that information from Kenya or Nigeria or whatever, you are not going. It's too late. For example, this happens a lot in cybercrime. Most of the cybercrime accounts are in those countries. The beauty is, you can't go there. You will get killed. So that is a problem. So all this we know only for countries like India who are willing to comply. How about the countries which are not willing to comply? There you can't go and wave your FATCA because it's not going to work. Okay. But then, an authorized person could be an authorized dealer. Now, who is an authorized dealer? Authorized dealers are banks and non-banking finance companies which satisfy the necessary condition. They apply for registration. They are scrutinized. Then the Reserve Bank of India gives a license to operate as an authorized dealer, which means not all the branches of a bank will be authorized dealer. There will be designated exchange control branches. Only there they can deal in foreign exchange. So any other branch which is not an AD branch will have to transfer this transaction to that branch. So they only act as a postman. Which is why when you're talking to your local banker, tell him very clearly, boss, you tell me, where is your ECD? Where is your exchange control division? In Chennai or Mumbai? If you have one in Chennai or wherever you are, sorry, I'm Chennai man, so I'm saying Chennai. Pune, then rarely they'll have in Pune. Chances are the brain center would be in Mumbai. So ultimately it will all get into Mumbai. So I'll tell him, please give the guys who is handling this transaction in Mumbai. I'll talk to him directly. Because he is the guy who will understand the direction. He would have completely, dissolved the APDIR circulars, the authorized person's directions. And he would have swallowed it, and he will be so authoritative. Chances are he'll also be a chartered accountant. Believe me, most of our brethren, they get into banks, they get into ECD because that's the best thing for them to do. So, and once he knows that you are a chartered accountant, he's a chartered accountant, that's a different fraternity altogether. So we get to talk and we finish it off. The point here is authorized person means an authorized dealer, money changer. Money changers are straight away there, just across the counter. You go give your foreign exchange, he will give you Indian currency, or you give Indian currency, he'll give you foreign exchange. But then he will follow the APC circular on holding foreign exchange, which we'll see. So beyond that limit, he won't give you. If you want to hold more than $5,000, he won't give you. And he will take your passport and he will note it in his records. And every 6 months or 3 months, his records are audited. Okay, and we certify his records and we see who drew what, and that goes to the Reserve Bank. So if somebody is drawing $25,000 and the passport account comes again 4 or 5 times, RBI will like, no, why are you doing this? What are you trying to do here? And where are you keeping this money? Because you are not supposed to hold more than this in your hand. So authorized persons have duties towards foreign exchange. Any person may be authorized by the Reserve Bank of India on an application made to it in this behalf. So obviously, individuals are not going to come. Only companies, and that too, they need to have capital norms, basic, so many conditions. The net worth norms are there. Unless they satisfy net worth and all that, they can't do it. So that's a different application process altogether, and you can get it. Once you get the license, only if the license to act as an authorized person is there, can they deal in foreign exchange. In other words, only then they can buy or sell, or somebody can buy or sell foreign exchange to them or from them. Okay. So once the license is there, then an authorized person may function as an authorized dealer, a money changer, or an offshore banking group unit. Now the authorization shall be in writing and will be subject to conditions. Most of the time, they will have to display it publicly in the place of business so that people who deal with them will know that the license is still valid. In the same way that my COP hangs in my office for people to know that I'm still eligible to practice. Something like that. The authorization given by the Reserve Bank of India may be revoked if it is satisfied that it is in public interest so to do. For example, if that authorized person has abused that license by doing money laundering or other criminal activities, close. The authorized person has failed to comply with the conditions laid down, which is different. With the first case is where public interest, that means he did something illegal or criminal. The second is, it was not illegal or criminal, but there is an omission or a commission. He has not complied with the conditions laid down. Or the third is very important. He has contravened any of the provisions of this act, or rule, regulation, notification, or direction. So, Reserve Bank of India has the right to give directions. These are very important. They have to be followed. Authorized person has to follow it. So, suppose tomorrow the authorized person scrutinizes a transaction, does not comply with the direction, then he will be liable. Okay? Where an authorized person is involved, he sort of takes over the liability. So that's why they are very, very careful. They don't permit anything and everything. An authorization shall not be revoked on grounds mentioned in 2 and 3 above unless the authorized person has been given a reasonable opportunity of making representation in the matter. Now, why, you might ask me, why is one he is not given an opportunity? Because the chances are it will be a criminal proceeding. So he has certain other rights under the criminal proceeding. The enforcement directorate would simply go down, arrest him, or take him under remand. It will be under PMLA. Believe me, it will not be under FEMA itself. It will be under the Prevention of Money Laundering Act. I'm sure you read that law, which is a stiffer law, where the enforcement director has the power to take him, not arrest him, but keep him in custody for 48 hours on remand without giving any bail. Then only he'll be produced before a magistrate. Because what he's doing is illegal. Okay? So it will be a different thing altogether. Under section 11, as I said, RBI can issue directions to authorized persons, and these authorized persons are strictly bound by these directions. Okay. Also, RBI has the power to inspect, and when they come to inspect, they can verify the correctness of any statement, information, etc. Usually they don't. What they do is they take a certificate from a chartered accountant once in a quarter, and for a money changer. For a money changer, they take a certificate, and unless there is something really serious, they don't come for inspection. But for banks, there is an annual inspection, RBI inspection regularly. ECD inspection happens. See, the gentleman whom I mentioned about who take classes, they have faced inspections. Also, I had another consultant who was empaneled with me, who was a senior director, sort of, from the Reserve Bank of India, and director from the Reserve Bank, a deputy director actually, retired. This gentleman was an authority on RBI and FEMA. Authority. Because he had inspected more than 1,000 banks. Can you imagine? More than 1,000 times he has inspected banks. Big banks. Okay, at the exchange control level, he has inspected. So that is the type of knowledge that they bring. I'm not trying to say, see, so you and I can definitely become experts in FEMA. Nothing, you can read the law, you can understand it, you might become an expert in it. But then, unless you are in banking, especially in foreign exchange, you will really not know the entirety of this law, because you will not see that many cases in practice. I have seen some cases in practice which is good, but that's not the same as this. So that's why I have a panel of experts. Whenever I have a doubt, I go to them. Nothing wrong. Nobody ever said a chartered accountant should be the ultimate repository of all knowledge. I know the general. Then when I need, so it's simple. Every doctor, see, today you go to the medical profession, MBBS is useless. Huh? MBBS is useless. Today, you and I have to compare ourselves not with MBBS but with MDs. Because MBBS is like a graduation. MBBS is no better than MCOM. So I'm sorry to say this. If you really want, so we are there. We are experts. But even there, in MD and MS, there's some kind of a specialization. Or even an MD would say, boss, I don't know this. I'm a GP. He comes to me, I treat him, general medicine, I know well. When I see something, I identify what it is, I can cure him for a short while. But something too serious, this is a very important expert area. Why should I take that risk? So I call in a guy, for example, may call in somebody who's specialized, a nephrologist or a cardiologist, whoever, and I say, please have a look. Because maybe I missed out something. Maybe I saw it, maybe I missed out. So sometimes the expert will come in and look at it and he will say, Shrikant, I think most of your diagnosis is right, but then have you looked at this? Or maybe he'll come out with a better treatment and he'll say, hey, Shrikant, that's good. What you've advised your client is perfectly correct, but then have you looked at this? Because why don't you do this? Try it out. So, or maybe I'll tell him, sir, will you do it? Okay, then package it, give it to the client. boss, this is the solution, go, he will help you, finish it and come back. Nothing wrong in that. That's how it has to work. Today, you can't do anything and everything. Expertise areas are needed. So if you want to specialize in FEMA, the best way to do it is work in a bank for 20 years in exchange control. It's the only way. By reading the books, you cannot become an expert there. See, unfortunately, whether we like it or not, experience is important. However much you say, I know everything, I have read everything, without the experience, it's going to be very, very difficult. Okay? So a consultant goes to a company and the machine is not functioning. Nobody knows how to do it. The maintenance department doesn't know how to do it. The guy walks around for three times around the machine when it's running. Then he makes them stop the machine, hits it with a hammer, and then says, switch it on. And then it's working. So then he billed them 100,000 rupees. And they asked him, hey, why should we pay you 100,000? He just went around the machine and hit it with a hammer. Then he said, boss, you're not paying me for going around and hitting it with the hammer. You're paying me for knowing where to hit. Because if you had known, you would have hit. So you are paying me for knowing where to hit. That knowing where to hit knowledge comes only with experience. Kala kramena cha. Okay? So passing the exam is a great achievement. I've also passed that exam. But acquiring experience becomes very, very important. Okay, shortcut. I don't have experience, sir. What to do? Listen to people who have experience. Have the patience to listen to seniors. Allow them to talk. Your senior in your office, your principal, the CFO of a company where you're auditing. Hey, these guys are repositories of experience. Allow them to talk. Definitely when they share their experience, there will be a lot of life stories coming out. You'll have to patiently listen to it. Because in that mass of data, you'll have your solution. Or you'll have your knowledge. If that patience is not there, maybe that much learning you're going to lose out. So this is the authorized person. They can inspect, and it's the duty of the authorized person to produce the books, to furnish the statement relating to the affairs of such person. And in the case of the company or firm, it shall be the duty of every director, partner, etc. So authorized persons have a duty under 11. They don't comply with this. There's a contravention of any of the directions. So on an inspection it is found, then the penalty is 10,000. Not bad. Per offense. It's a continuing offense. 2,000 for every day during which such contravention continues. Moving on. This is the appellate hierarchy. The questions in the exam are mostly on whether you know about the appellate hierarchy. Right. So basically at the bottommost rung of the foreign exchange management pyramid is the adjudicating authority. When we studied Companies Act, there also we saw the adjudicating authority. Usually these people are called assistant director or deputy director. Okay, in fact they report to the Ministry of their in this case the Ministry of Finance, and in the case of the Companies Act, the Ministry of Corporate Affairs, and the assistant director or deputy director has the authority to adjudicate. They can decide the penalty to be paid. So where the offense involves an amount which is less than 1 crore, then it is the assistant director or deputy director. Where it is less than 1 crore. And the minute the offense involves an amount of greater than or equal to 1 crore, then you have to, it will go to the director. Just compare it with your income tax. If you're familiar with the appellate hierarchies in income tax, this might sound a little easier for you to understand. Under the income tax department, you have people called the assistant commissioners. They're called commissioners. The revenue department, they're called commissioners. So you have the assistant commissioner, the deputy commissioner, and the joint commissioner. These guys. And then, of course, you have the commissioner. And then you have, in between, you have an additional commissioner. Just because these guys need to be promoted. So the point here is, assistant and deputy directors have certain jurisdiction. Finally, certain things only the commissioner can do. So this is like that. Okay? So now if you understand this, you will understand that at the same level as the director, they've created a new guy called Special Director Appeals. Within the ministry, within the framework, within the Reserve Bank of India, they've created a Special Director Appeals. That is why the parallel with the income tax department works very well. Because even in the income tax department, you find when you have a dispute with the AD or the commissioner, when you have a dispute with the assistant up to additional commissioner, you're having a dispute, you can go to the special director appeals. But the minute you are having a dispute with the director, for example, under 263 or 264, you have to go only to the appellate tribunal, right? Because they are at the same level. You can't appeal against this to the special director appeals. In fact, maybe the comparison is too much because 263 is a different kettle of fish altogether. It's actually you surrender all your 264, I should say, Income Tax Act. You surrender all your appellate remedy and then only you come to him on 264. Keep it open, then he says, no, you want me to do this? Then come to me, surrender that right, then come to me. So you can't go to the Commissioner Appeals. You have to come here, right? And you have to rely on his quasi-judicial power and say, please help me because revise the order. The guy has done something patently wrong. He didn't see the facts properly. Please see it now and give me an order. Whatever it is. See, where the offence is involving an amount of less than 1 crore, then the adjudicating authority is the assistant director or deputy director. Where the offence involves an amount greater than or equal to 1 crore, you have to go to the director. Now, appeal against AD or DD is to the special director appeals. And the time given is 45 days. Friends, most of the issues in FEMA would be factual issues. Which means, when was it filed? Was it right or wrong? Could you have given him the opportunity? And stuff like that. So this is something which can be handled within the department. There is no need to go outside of the department. Because the special director appeals also would have been in the other post. He would also be in the administration. So he will know what it is and he will say, yeah, why don't you help this guy? Yeah. After all, he has brought the money back to India. See, think about it. A typical offense would be something like this. Guy exports. You will be seeing the regulations later. The regulations have a certain time limit for repatriation. The guy doesn't do it within that time. Now, all he needed to do was go to his authorized person and give a letter asking for time. And there's a process. Maybe he didn't do that also. And now that it's gone way beyond the time duration, right? Obviously, at this point in time, the authorized person has a inspection. And during that inspection, this comes out. Then the authorized person is told to give, the authorized person is given time. You got a client who has exported. He has given you the details of the export, but he has not brought the money back in. And it's still open in our account. I will tell you how it will become open. Because the RBI also tracks. Every invoice the RBI tracks. And he says, for these clients, the accounts are open. Huge amounts are still pending outside India. So the AP, the authorized person will come running back and then he will become the guy who was your friend who gave you coffee and treated you so well will suddenly become an enemy. He will start shouting at you or abusing you and saying, why don't you have done all this, please do something. But you're not able to give a proper explanation, then this guy will simply pass the buck. And then the DD or AD would, depending on what they're doing, the way you represent is very important. So if not properly represented, they will pass a penal order on you. Now, thereafter you go to the special director appeals and tell them, genuinely I had this problem, I couldn't do this, why don't you help me? So the special director appeals will may decide in your favor. So these are the issues that will happen in FEMA. You won't find many intricate questions of law happening in FEMA because the law is fairly simple and it's all regulation based. And the regulations are fairly simple. There's no question of interpretation. You either comply or you don't. If you're non-compliant, then the only space to move is mitigating factors. What happened? Why did you? Was it genuine or are you a criminal or are you an honest man who made a mistake? So if you're an honest person who's made a mistake, no problem. Some order can be passed to help you. So in this case, the special director appeals is there. An appeal against or sometimes the ADs may pass a patently wrong order. Sometimes they do. Very crazy order they will pass. The regulation itself will be talking in one way. This guy will pass an order. There you have a strong case. You go to the special director within 45 days. Suppose you are not able to go within 45 days, the delay can be condoned by the special director if sufficient cause is shown. Right? This is similar to what we saw in Companies Act. Similarly, if against the director's order or against the special director's order, you have the right of appeal to something called the appellate tribunal. See, unlike the securities appellate tribunal or securities appellate tribunal or the consumer appellate tribunal, this is simply appellate tribunal. It's not called fiat. It's not a foreign exchange appellate tribunal. Within the framework of the FEMA, there is a guy called the appellate tribunal, and that appellate tribunal you have to appeal within 45 days from the date of receipt of the order from the director or special director. In case there is a delay, they can condone the delay provided you give sufficient reason. Now, another 45 days in both cases, they can condone the delay. You are not happy with the appellate tribunal's order also. And remember, if you are going up to the appellate tribunal, the amount involved is in millions. Otherwise, you are not going there wasting. Just pay your fine and go. Why are you wasting time? Suppose the amount involved is pretty high, you have to pay a huge penalty. You may go there and try your remedy, which is when you will need expertise. Which is when you will need expertise of knowledge of FEMA, because their regulations have to be thoroughly read and see where the space is for an argument. If it is, then go to appellate. Suppose the appellate tribunal also decides no, pay, dismiss. Then you still have a right to go to the High Court within 60 days. Okay? An appeal can be filed to the High Court within 60 days. But remember, from going to appellate tribunal to High Court, there should be a substantial question of law surviving. You can't go to the High Court on fact. And from the High Court, the normal course within the judiciary, the judicial framework of the Civil Procedure Code, you can go to and the Constitution, of course, you can go to because the Supreme Court has an appellate authority over the High Court, and that appellate authority includes this also. So against the High Court's order, provided there is a substantial question of law, the Supreme Court will permit you to come, because the High Court should permit you to go to the Supreme Court. Within the framework of the Constitution, the High Court has to permit you to go to the Supreme Court. If the High Court does not permit, then you have to go to the Supreme Court on a special leave petition, and then the Supreme Court will direct the High Court to frame the question and send it. So all that is there within the framework of the Constitution, and you can use those remedies available to you till the matter is finally decided. So now let's come to Mr. Unsatisfactory. Actually, it should be unsatisfied. See, because unsatisfactory means the guy is unsatisfactory. I don't know in what case he is unsatisfactory, but he is unsatisfied because he is aggrieved by an order made by the appellate tribunal, so where does he want to go on appeal? So it's a simple jnana. You just have to say from the appellate tribunal, you can go to the High Court within 60 days. In case there is a delay, the High Court can condone the delay provided sufficient cause is shown. So which is out of 6 marks, 2 marks. So if you write what I've said, it is 1.5 marks. That's all. And again, it's a pure theory question. All this banda, unsatisfactory, all that is just gups up. All they are asking, it's a straight theory question, reworded. Discuss the provisions for appeal against the appellate tribunal under the Foreign Exchange Management Act. That's all. The straight theory question disguised as a problem. Let us see if questions are there. Oh, wow, there are a lot of questions. It's a good point to stop because reached one logical area where I can stop here, because to an extent we have completed the act. Okay. I think I'm not able to see. Good question. Whether Sudhir is asking, I don't see. Just check up with your bank whether for pandemic they are giving. As of now, I don't see it. For pandemic, they have not given any relaxation. Okay, absolutely. I am not aware, but 95% no. There is no relaxation for pandemic. You got your $250,000, which is good. You can send it out. Okay, bringing in no limit. You want to bring money into India, welcome. Okay, so long as it's not a loan, so long as it's not a liability being created here, So long as you're not creating a liability outside India, please bring. Any amount can be brought into India. There is no relaxation. But then I'll let you in on a small secret, which I keep telling my clients. Whenever you have a problem in FEMA, it is not irresolvable because there is a lot of space within which the authorized person can move. The FEMA has delegated the power of administrating the Foreign Exchange Management Act and the regulations to its authorized persons. So the authorized persons have a lot of space within which to move. Similarly, the adjudicating authorities have a lot of space within which to move. So long as there is no money laundering, so long as there is no criminal element involved, it's a genuine commercial transaction within limits, they can give you a lot of specific permissions. So you should use this power of the Reserve Bank of India to give you specific permissions. For example, you want to do something because of it is pandemic. Okay, you have to define what you want to do and justify it, and then put up a nice note. Okay, it should be properly done in writing, not oral. Put up a nice representation letter to your authorized person. You can't go directly to RBI. Go to your authorized person, talk to him, ask him, can you help me? Then he will also give you some ideas, and then you put it in the form of a nice letter, which is where expertise is needed. See, I have done this for many clients, where for situations where it was not permitted by the regulations or there was no way it could be done, we have gone to the Reserve Bank of India and got a special permission through the authorized person. So convince the AP first and make him your buddy. And then the AP goes to the Reserve Bank of India. At one stage, you also tell the AP. That's when I say, let me talk to your Mumbai guy. And then the Mumbai guy says, yeah, this is possible. For all you know, they might have done it for some other client. So they will give you the framework, or you can suggest to them, we want to do this, we want to do this. We know the regulation says like this, but can you please make an exception for us? They can. So unlike, other laws where exceptions cannot be created, under FEMA, RBI has a lot of power. This is something it's outside the scope of your institute material. I'm sharing a very practical thing with you. I have done it many times. That's why whenever a company calls me for a discussion or comes on Zoom nowadays for a FEMA discussion, I listen. I don't judge. I listen to the facts. Then I put the facts onto the template and I see where it is jutting out of the regulations. And then I see if it's a big thing. Can that be adjusted? Can we go for a special permission, etc.? See, but then you have contravened the regulation. Even there, believe me, there's a flex. You can go there. So because of pandemic, if you have some genuine reason, you can get. So that's how it is. So gift. See, you can be giving in. I think you should read section 3 very clearly, Bhavati madam, because section 3 is very clear. It doesn't matter what currency it is. If you are making a payment to a PRY, then even if you do it in rupees, it is governed by foreign exchange. I'm seriously not aware why it is called a capital account in his name. Let us leave it, no. But it is a current account for you. For the PRIA, it is a current account. And you can do it as per the FEM guidelines, FEM rules, current account transaction rules. You can do it up to $250,000. You can do it. So this is how it is. Good. I hope things are going smoothly, because now we are going to get into an area which is, shall we say, very heavy on content. Now, so what I'm going to do, and today, because yesterday we closed at 9, I still have 1 more hour, and I need 1 more hour to cover the topics that we are going to cover from now on. From now on, we are going to get into external commercial borrowings. No, basically, we are going to see export and import. Then we are going to see ODI, and then we are going to see ECB and close. So these are a bit heavy on content, and I'm trying to make it as simple as possible for you. And more importantly, I will explain the context, and I might also like to share a few stories of how we handle 1 or 2 transactions. But then, I don't want to do it immediately because I woke up at 5:30 in the morning and just had a cup of tea and a biscuits. Now I feel a little hungry. I'm sure you're feeling hungry too. So let's have a break for 15 minutes. I'm going to take a break for 15 minutes, not the usual 10. So it's now 8:45 sharp. We will meet again at 9 a.m. Indian Standard Time. I'm now going to stop my video. Thank you. Meet you again at 9 a.m. Okay, Jay? Welcome back to the session, and let's continue where we left off. So we saw the Act and we saw the various provisions which are important. Please, before you do your revision using the BOS material on the RTP, please ensure that you have the RTP with you. Please ensure that you have the inclusion and exclusion with you. There's a downloadable content which is called inclusions and exclusions for your syllabus, which is very important because there are many sections which are excluded, and so don't worry about it. You can. So, but what I have done, I have captured the essence of this topic. Okay. Okay. Before I continue with the topic, this being the last session on final, and I used to teach final since almost 1994 onwards to 2012, I was teaching the final examination in Chennai. I was part of the faculty at the SIRC, and of course I was also a faculty at a popular coaching institution called Prime Academy, wherein our Mr. Vijay Kumar was there, R. Bhupati, our past president, because they were inspirational, because Bhupati and Patabi and all were inspirational for me, and they were great people with whom I related. I went there. Otherwise, I would not have gone for private coaching, since these people were inspirational, and Mr. Bhupati, our past president, himself is my guru and my mentor. And so that sense, I felt nothing wrong in being associated with such a provenance and people of high ethical and moral conduct. So I used to teach there. I also wrote a book on corporate and allied laws, as it was then called, which was published. Why I make this point? Because I used to teach students, and especially I used to run something called a crash course. And so in the crash course, I used to have to rush over it, and I used to do this. And so at that point in time, I had to be selective on what I taught. I could not teach everything. So for the regular session, which ran for about 60 hours, I could do everything. But then for a crash course, I'm not saying this is a crash course. I'm saying even for a crash course, you have to be very choosy. And when I did that, I realized that the institute examination is a predictable pattern. Sorry to say this, and that too on the BOS portal. But then, not only this paper, all post office, that's how it is. You see, there is a cycle. On the given content, which is finite, how many questions can you keep asking? And the more you try to be vague, the more you're going away from relevance. So they should also ask you questions on topics that are relevant. They can't pick a section, some vague section somewhere in the corner and expect you to know it and then ask a question there, because not knowing is not a crime. But not knowing 186 is a crime. Not knowing 185 is a crime. Not knowing section 5 of the FEMA is a crime. Not knowing the current account transactions rules is a crime. In the sense, what I mean is, that's not fair, because the chartered accountant is supposed to know it. But suppose there are some vague sections there, section 30, section 30, not really. So they also know common sense, So most of the time, questions would come only from cluster areas, which means you should be aware of those cluster areas well. So a preparation would not be reading the whole material and mucking it up. No. A smart student would take a topic, look at the questions which are asked in the past, so identify important topic clusters which are frequently tested, and become thorough in that first. That's it. Then and only then would she or he get into the rest of it. So it's like, an eclair. When you're eating an eclair, you should nibble into it and then take the chocolate. And then you eat the outer crust. So something like that. So the essence, the chocolate, is the clusters that are going to be tested. So today and yesterday, what you learned in FEMA were these clusters, these important areas where testing will happen. We have taught you. So the point here is, some vague section somewhere sitting down, if you want to go and read it, please do it. But don't waste your time initially. Do it later. But before that, be strong and thorough in this, but especially residence, because chances are very high it's going to come. So and that's it, you will crack. See, that's about straight away 4 marks for you. And see, when a person like me is struggling, like I'm not intelligent like you, when I go to write the examination, I want to score, because my goal is to get not less than 60 in all. Otherwise, there's no point in writing this examination, which means every question is important, every mark is important. So, which means I do not walk out of that exam hall unless I have written something for every eligible question. No way I have ever turned in a paper in a professional examination where I did not write an answer for a question. That way is low IQ, as Amitabh Bachchan keeps saying. That's low IQ thinking. You might write a brilliant answer in one case, but then you don't write an answer for one question. The examiner gives 0 for that. Here he might give you 95, but still it's not going to help you. Get 95 there, smart, but get something here, because every mark builds and you are able to get 60. If you ask me, this is simple secret for getting a rank in the examination. And getting a rank in the final examination, believe me, has a payoff. I know what the payoff is. When I was 21 years old, 27 companies sent me their biodata asking me to join them. I'm not boasting. I'm saying that is the payoff. Okay, that is the payoff. You get invited. Okay, so is it not worth working for that? It is. Then what do? You work smart. You think like the examiner. You understand what it is expected of you, which is more important than taking the Board of Studies material, mucking up the whole thing. That's an approach. I'm not questioning that approach or its facility or its felicity or its greatness. I salute those gentlemen and ladies who are able to muck up the whole Board of Studies material, come out there, and then I got 62, they got 65. 3 marks more. For what? So much struggle for what? 3 marks more. Because the technique is more important. Please, don't take me otherwise. Don't get me wrong. Don't get angry with me. Don't plan to put bomb and all on my house. I'm just telling something which is of interest to you as a student. I was a student once. I am a student still. But in terms of examination writing, I stopped being a student at the age of 30. Yeah. Till then I was writing exams. In fact, I'm also a company secretary, as I told you. There again, I got All India 4th rank and All India 10th rank. Because after CA and all ACS, I used to just laugh and write. And I learned a lot. In fact, doing ACS helped me to add on knowledge. Okay, here's something coming out. You'll be very surprised to know. When I wrote my CA final examination in 1987, there was no indirect taxation in the syllabus. Go check it out. I'm not telling a lie. There was no indirect taxation. There was no indirect taxation in the syllabus, but mathematics was there. And I was the secretary of SICAS at that time. So I remember BOS chairman had come and BOS people, and I was a youngster, at that time, hot-blooded like many of you. I stood up and I asked, I'm going to practice as a chartered accountant. My dear sir, in my practice, when will I use integration? When will I use complex numbers? So the Board of Studies director himself started laughing and he said, I think this gentleman has a point. Just make a note of it. Why are we having mathematics in our syllabus? So then I remember they removed mathematics after that. But then 2 sessions later, I had to write it. And I got a decent mark. I got about 60 there. That's a different story. But then the point here, my dear friends, is it's easy to crack. Easy to get very high marks. It's not about mucking up. It's not about having bigger and bigger books. It's not about buying private books written by private authors running into 1,000 pages. If you read all the 1,000 pages, definitely the institute paper is going to come out of that. But then it's a waste of time. Don't do that. Analyze the questions, analyze the pattern, analyze the content, read the content, know it, understand why. Understand why rather than mug up. Similarly, there is another tendency for many students to make things more and more complicated. No need. The institute questions are fairly straightforward and simple. So don't break your head on small stuff. Okay, don't sweat the small stuff. Go for the really big targets there, and if which you can hit, you are going to get big marks there. So for example, if I'm studying cost accounting paper, the first topic that I mastered was standard costing. Because 100% standard costing is going to come. 100% it's tough. Then why keep it till the end? And why study labor cost and material cost, which is nothing? They're not going to ask you. And standard costing is going to come there. And that too, they're going to adapt questions from SEMA. They're going to kill you. So that's where you have to go. So go for Colin Drury. Go for a SEMA paper and study that. And become thorough in standard costing. so that these things don't matter later. Okay, is the point. So this is what I would strongly advocate and suggest to you. This is how smart students, not just me, people like me, across the years, across 5 decades, have been able to score high in CA paper. Not just me. It's not only me. There is the learning of smart people across the 55 decades it's worked. Okay? You can ask any rank holder or any smart CA guy who's cleared in first attempt. He or she will tell you, I didn't read the whole thing. I read only what I thought was important based on an assumption. I did an analysis. Then I wrote and I got it. So this is something I might want. So don't sweat the small stuff. Don't waste your time on small issues. Please go. So every line, you need not read every line of the BOA study material, analyze it, understand it. I mean, if that's what your aim is, wow, bye, congratulations. You take the high road and I'll take my road and let's meet again somewhere. If this is sorry, this sounds a little conceited, but that's how it is because the formula is with me. I've cracked it. Okay, and I know how to crack it again. So for example, I'm not a cost accountant. Suppose I were to write the examination at 55, which is one of my aims, when I'm 60 and I have nothing to do, I want to write the cost accounting examination. And maybe add that qualification to me. Because as a practicing chartered accountant, it makes no financial sense to me. Just out of interest and because the brain won't be idle, because this brain is not going to be idle, I have to keep it occupied on something. I would rather do that. So there again, it will be easy to crack. I'm sure the Cost Accounting Institute has a pattern. I'm sure they will be cycling questions. I will know where to go and hit and then go and hit. It's a pattern. If you know what it is, it's easy. I know many of you are getting angry with me because I'm making it sound so simple when it was not so simple for you, when it took long time. So I'm going to ask you, go and examine your own conscience. What did you do? Where did you go wrong? Okay? Go back to the drawing board. Rework the plan and then come and hit the exam, you will clear it. If you do the same things again and again, how will you win? If you want to get extraordinary results in your life, you have to start doing extraordinary things. At least if you want different results in your life, my dear friends, you have to start doing different things. Not the same old things and then expect things to happen. No, it's not going to happen, right? So this is a thought seed I am putting in your mind. Gratis, nothing to do with FEMA. Please don't punish me for that. If you think it's a good idea, please try it out. If you think it's a bad idea, just forget it. Good. Moving on. Let's start sharing again. Let's now go to the remaining part of FEMA, which is contained in regulations. I'm now going to open another slide, which is again on the regulations part. Okay. So we are now getting into the regulations, which is, as I told you, the law is contained in the Act and in the regulations. So the regulations are a bulk of the law. And the Institute has selected a few of these regulations. Want you to be thorough in that. So we are going to see what they are now. The first of it is the provisions relating to export of goods and services. Before we get into this, what is the principle operating here? We want more exports. We want more exports. We want foreign exchange. It's a good foreign exchange. You see, like for example, when you're eating, you get calories from every type of food stuff. But then starch gives you a bad calorie. Okay, whereas protein gives you good calorie. Builds you. It builds your body. So protein doesn't get accumulated. It builds you. Okay. Whereas sometimes starch gets accumulated and then you are in trouble. So any forex that you earn through export is good stuff and we want it. So one of the concerns of the government of India is what is being exported? What is the value of the real value of the thing being exported? And what is the money that's coming in? They are very concerned that the value exported should be the true and fair value and that money should come back to India. That we should not export something out of India by overvaluing it, and then by undervaluing it and then sending it out so that he pays the undervalue amount. So Indian government gets only the undervalued amount, whereas the foreign guy gets the extra value, which is obviously split between you and him. How? When you possibly operate on that's exactly why you need Cayman Islands and all that stuff, right? So this is one classic example of hawala that I told you, where you undervalue export. The gems and jewels industry used to do this a lot, and the articrafts industry used to do it a lot. They used to undervalue, then export, get the money, quietly close that, but the remaining, the balance amount will be settled in Amsterdam possibly, and then from Amsterdam it will fly to Cayman Island and the money is gone. It doesn't come to India. So our concern is that the goods sent should be of the correct value, and the money which is billed should be collected and brought back to India. So this is the principle operating here. So the entire regulation is meant to ensure that valuation is correct, the money has come back. So the first step is every exporter of goods and services shall furnish to the RBI the true and correct material particulars, including the amount representing the full export value, or if that is not ascertainable at the time of export, the value which the exporter, having regard to the prevailing market conditions, expects to receive. Maybe if they are sold on consignment basis, you really don't know what price you'll realize, then you'll have to tell them, by and large, this is what I'm expecting. If at all there could be a loss, it should not be on account of pricing, but on account of exchange. There would definitely be a gain or loss on exchange, right? Furnish to the Reserve Bank such other information as may be required. Now, though the regulations say furnish to the Reserve Bank, in all cases, you are going to go only through an authorized person. So the principle operating here is that the true and correct value of the goods and services should be realized and repatriated. So with this in mind, RBI has framed the FEM, Export of Goods and Services regulations. Right from 2000, we've been having these regulations, but in 2015, they were substantially revamped with effect from 12/1/2016. So where you are exporting goods in physical or software in physical or any other form, either directly or indirectly, to any place outside India, then you should furnish a declaration. What the form is, we'll be seeing a little later. So a form should be filed. This is how RBI comes to know about every invoice raised by a person. So the minute you are raising an invoice, even though you may not have a facility with the bank, even though you are not going to take a bill discounting facility with the bank, foreign bill discounting facility with the bank, still you have to inform the authorized person that you are exporting goods, and he will keep track and ensure that it comes through him. Because remember, you cannot collect money for a foreign payment without an authorized person, otherwise than through an authorized person. This is where many people commit this mistake of raising bills and then finding that even services, you have to do the same thing. You'll see that later. You just simply raise the bill and then you don't inform the bank. Then suddenly the money has to come in and the banker will come back and ask you, what is the purpose of this remittance? So immediately the SWIFT code has to mention very clearly under which head it's coming. So there in the SWIFT code, the counterparty will simply put payment against invoice for services or whatever, or goods. And money comes in. This guy, the bank will ask you, where is the invoice? Why didn't you file that invoice? Before you did this, you should have given us the details of that invoice. Only then we can close the account. Now RBI is going to ask me. So are you able to see how the problem starts? This is a very simple problem. Then you tell the APO, I'm so sorry, I didn't know about this. Hey, here is the invoice. This is what I have accounted in my books. Here's my chartered accountant's certificate saying these are all the invoices raised and please tally it with the payment and close it. Please inform RBI accordingly. No problem. See, that's what I said. Even if you don't give it initially, you give it later, the AP has the power to look at it. So long as it's genuine. With tallying, okay, and then he will tell you in future, please don't raise a bill and then send it off. Please give me a copy so that I will know what it is. Where it's export of services, okay, he may export such services without filing any declaration, but shall be liable to realize the amount. So services, slightly different because in the case of services, we really don't know what the valuation is. Nobody can value a service. I give you the example of a consultant who hit the machine with a hammer. What is the value of that service? So he decides. So nobody can decide it. And whatever the customer is willing to pay is the final point. So if the customer is willing to pay, then that's the value. That's the best way of valuing services. Whatever the customer is willing to pay. Because if the same service is premium in one case and normal in another, so it depends who is doing it. So the point here is, even then it has to be realized, which is why even for service exports, we strongly suggest keep the bank informed, or at least when the money is coming in, you have to go and give him the invoice copy. You can't just like that say, it's for bills raised. Oh, really? What bills? So you'll have to submit the bills. A realization of export proceeds in respect of export of goods software from third party should be duly declared by the exporter in the appropriate declaration form. So the first duty is to declare the export in the form. Now we come to an important area of exemptions. When this need not happen, especially for realization and repatriation of forex. Let me simply see if I have any queries are there. Yes. Just give me 1 minute. I have to quickly go there. So in case you have any questions, please feel free to ask. Not a problem. I don't see any questions as of now. I'm on the query pad. I'll keep looking at it. We'll move on. The exemptions are very important because these are cases where you need not repatriate or realize the money. These are cases where you need not give valuation. For example, trade samples of goods and publicity material supplied free of payment. You have to make a declaration that this is what it is. Similarly, personal effects of travelers, whether accompanied or unaccompanied. When you're coming back, example. In fact, you go. I did this in Singapore when I'm a great Android fan and I use only Android phones. That too a Samsung, that too Galaxy Note. As and when Samsung releases a new Note, you went. When I was in Singapore, I saw the guy gave me a fantastic discount in Singapore. I bought it and I bought it back. So it's basically a personal effect. I bring it back. All the rules don't apply there. I think one single cell phone used by that person is a personal effect. Okay? It can be bought, not a problem. So on and so forth. Ships stores. The ships, what they do? They buy stores and they put it because they have to travel. So when they do that, they are exporting, but then it will not come under that. Similarly, transshipment cargo. The cargo just lands in Mumbai or in Kandla, then it is immediately shipped. So it's transshipped. It's just lying there to go. It's not going to come inside. Technically, it's not even an import. It's a transshipment. In those cases, when it's transshipped, that export is an exemption. And goods supplied under the orders of central government, etc., relief materials, etc., all that is. Similarly, any goods supplied by way of gift, but then when you are sending goods as a gift, the value cannot be more than 5 lakhs. Sending a gift. For example, since you people are so keen on giving gifts to NRIs, you might want to send a Tanjore painting to an NRI. Great, you can do that as a gift, provided the value does not exceed 5 lakhs. And when you are sending it by FedEx or whatever, you will have to clearly give a declaration to FedEx that it is not more than 5 lakhs. And if later on they open it and they find it's more, you are in trouble. See, this is a violation. But by and large, up to 5 lakhs, gift of goods can be sent. And before you get into capital account, current account, this is a classic current account transaction. Goods are being sent as a gift. So from the perspective of the PRIA, it's a current account transaction. From the perspective of the PROI, how does it matter? See, that's a bigger question I'm going to ask you. How does it matter? Because FEMA governs me. So I should only look at it from the PRIA's perspective. From the PROI's perspective, it's the US government, okay? As far as I am concerned, I can send it out. That's all. The government doesn't, once the gift goes, Who bothers? Let him do whatever he wants with it. It's a capital account. He's debiting the balance, crediting the balance sheet, or crediting the income statement. It doesn't really matter. No? That's my humble submission. Doesn't really matter. Why are we getting into it at all is what I'm asking. Question is, can you give him the gift? You can. It's a current account transaction. You can give him the gift. Whether in here, there's a sublimit of not more than 5 lakh rupees because it's non-cash. Aircrafts are aircraft engines and spare parts for overhauling and repairs abroad, etc., etc. Fairly simple, valid reason. You see, if you look at all these exemptions, they are for valid reasons, right? Goods imported free of cost on re-export basis. Many times, goods come in only for the purpose of having work done on them and then again re-exported, value added. So there'll be a sort of a back-to-back invoicing, in which case, when you're importing free of cost and on re-export basis. See, this happens even for GST. But in India, foolishly, what we do when GST, when goods are sent for, what shall I say, further, mechanic, further maybe fabrication or machining, etc., etc., then finishing and all, you have to raise a bill. Then again, that guy sends it back to you, completed. He has to raise a bill. And then, of course, ITC and all that stuff. But seriously, I don't really see the point here. But goods, in the case of import-export, no problem. You can import it, convert it, send it out, no problem. In the case of special economic zones and other types of areas, okay, you can send goods out which are found, when they were imported, they were found defective. You can send it back for replacements. Okay? When you're receiving goods from foreign suppliers or collaborators on loan basis and all this, you can send it out, send it back without any problem about repatriation or thing. Declaration also is not needed. Now, one more thing, remember, when an entity is sitting within the economic zone, special economic zone, whatever it is, or technology park, STP, SEZ, STP, FTZ, all whatever you're calling it, basically this guy is an insulated environment. And anything and everything that leaves that complex needs to be supported by a document. It comes in, it goes out. In fact, at the end of the day, for an SEZ or an FTZ, okay, even in a software technology park, the import has to be tallied with the export. For example, when I'm importing raw material, I have to tally it with the finished goods. 1-to-1. Unless it's a material that's being converted, then also I have to convert, I have to tally it weight. For example, if I'm importing steel or I'm importing a particular metal, melting it and making something else, okay, then I'll have to show that the amount that I imported in tonnage got exported, subject to normal wastage. If I don't prove that, it's a bigger problem, not under the FEMA alone, but under SEZ itself. The SEZ law is itself very tough. So they want to know exactly what's happening there. Plus, you'll come under FEMA because of, once you raise the invoice, you have to get the money back. So that's how it is. Again, go for the logic. See, why are they doing it in SEZ? Because in an SEZ, we are giving you a facility to import without any duty and manufacture, no service tax, nothing. We treat you as if you're sitting in a foreign country. The whole hope is that you will export. And that export would bring profit. And that profit, again, we tell you, you don't have to pay tax for the first 5 years. We give you all that option. And then finally we say, hey, now that you're making some money, why don't you pay me some tax? Okay. So in that being the point, that's why it's so strict. So that's why some valid exceptions are made. Defective goods, loaned goods. Okay. So they have to be re-exported. That's what I was saying. See, anything that comes in has to go out. The special economic zone, nothing stays here. Of course, there is a possibility that up to 25% you can sell in the DTA, domestic tariff area, but then subject to that, it has to go back. So again, exemptions continue. Goods sent out of India, outside India for testing, subject to re-import into India. Okay, so you're sending it out for testing and re-importing it. No problem. But then all this, you will make a declaration to your AP, you have to tally it. Are you able to see so many opportunities here for doing all golmaal? Huh? Every one of these items is a golmaal item. You can use this genuine exemption to do some nonsense. Then they will monitor you. See, there are three guys watching you. The Exchange Control Department, the Foreign Exchange Control Department is watching you. Customs is watching you. Okay, because they want to know what you are doing. These two guys are, finally, of course, the Income Tax Department indirectly is watching. So three guys are watching what's happening. In spite of all that, our friends are doing money laundering. What great guys, huh? They are doing money laundering. In spite of all this, in spite of knowing that, if they are caught, it's jail. They are doing money laundering. Okay. So similarly, for in any other case, when defective goods are sent outside India for repair and re-import, there should be a certificate from the authorized dealer that the export is for import. That's why anything and everything that you do in connection with FEMA, you need for doing some ceremony at home, you need a Prohit. Similarly, for this, you need a Prohit, that is authorized person. Without the authorized person, don't do anything. But again and again, my suggestion, definitely a member in practice, chartered accountant, or a CFO who's smart is good. But the transaction doesn't go through unless an authorized person gives his blessings. So, any exports permitted by the Reserve Bank on an application made to it. So, K is the open house, which is what I told you. You are not able to bring it under any of these categories. What do? You go to K. You go to the Reserve Bank itself and you fall at their feet and say, hey, help me. I don't know what to do. We had this peculiar case where one of our clients was exporting. I'm talking about the peak, 2000 to 2010, when 95 to 2010, 15 years of heyday for exporters, especially garment. Garment business was really booming in India, and companies were simply minting money. And so one of our clients who was a huge garment exporter, they slowly, as the benefits started going away, as the section called 80 HHC, which many of you may not even know that it existed, okay? Just like many of you may not know about 32A, 32, because of depreciation, 32A, AB, like that, 80 HHC was there. In the chapter 6, you had this 80 HHC as HHC used to actually give an export benefit, 100% export benefit, all that gone. So finally what remains is only SEZ and somewhat EOU and all that, but that's again very restricted. So the point here is once the benefits started coming down, the other cash compensatory support started coming down, slowly this became a little because China and Korea and Taiwan were really making headway with cheap labor. They were able to give the best prices. So Indian garment exporters needed to really relook at what they were doing. And they thought SEZ was one option, but that wasn't. It was too costly. When you really see, I've done the SEZ numbers crunching 3 times for 3 clients, and every time we came out with a negative number. When we discounted it back, when we took all the costs of setting up an SEZ and we took the benefits of going to an SEZ, every time we got a negative present value. And I said, no way, let's not do this. And they also didn't do it. The point here is, so the only other option left was to look for neighboring countries where there is cheap labor. Bangladesh was obvious, but then it wasn't that obvious then. But Nepal was there, and Sri Lanka. Both are bad countries to do business in, but the labor seemed to be cheap there. So initially for about 5 years, my client had to operate from Nepal. Now the problem here is the bills are raised from India, but we have to receive it in Nepal or Sri Lanka. So the reason is 85% of the bill is cut make trim, which is the cost. So that was how margins were. For all they made money on the dollar. Believe me, on the actual transaction, he made very little. But on the dollar, he made some money. So this guy, he had to make the payment there. So we needed a facility by which the bill would be raised from India, shipment would go from Nepal, and the payment would come to India. So we wanted to split the payment, partly into Nepal and partly into India. So this was something which was absolutely not in any rule book. So we didn't know what to do. So the CFO we had a There was a smart CFO sitting there, a cost accountant, not a chartered accountant, a cost accountant. So he came out with the brilliant ideas and all. Then he took me because he didn't have the confidence. I said, "Hey, you come out with this idea. Go, no, Mr. Srikanth, you come with me because again communication problem. See, a man without knowledge, communication skill wins every time." So I went with him. Of course, if he had gone on his own, this brilliant idea would not have floated because he didn't know how to project it. So we projected it to the AP, and then the AP caught the idea, took the ball, ran with it, and RBI, and chuck, we got a basket there, slam dunk. And then we got a special permission from the Reserve Bank of India to do this. This was early days, and then Nepal itself became no good, and Sri Lanka was absolute no way. Political unrest, blah blah. So finally, they selected Bangladesh. They set up a company in Hong Kong. They then operated from Bangladesh. That's it. Buy India. No more India. Everything goes on. Hong Kong company builds. Bangladesh exports, and Bangladesh is doing great that way. I recently visited Bangladesh to review these accounts and to just audit them. When last year I was in Bangladesh, fantastic, small country. It's not even fit to be a state if he's part of our country. And the borders, Bangladesh has no borders with any country other than India. Okay, we are its only neighbor. Can you imagine? Every other country which is our neighbor has another guy on the other side on the border. This guy doesn't have. You enter Bangladesh, you keep traveling straight to the east, you will exit Bangladesh, come back to India. Now, I'm not trying to put the country down, I'm saying what growth, what fantastic. I was in Dhaka, but then Chittagong. Real action is going on there, and I loved that country. It's a good country, trying to do something out of itself, using this cheap labor there, definitely, but there's no exploitation. When I went there, I was honestly thinking there would be exploitation. Believe me, there was no exploitation. In fact, they pipe music in, the girls are treated very well, and since most of them are Muslims, they have the facility to pray. They stop the work for prayer, and they give them breaks. I saw it happen, and I think it's good, not bad, and they are doing a good job. Okay, so moving on. Whenever you're doing all this stuff, as I told you, there are 3 guys watching you. I said, no, the customs through the DGFT is watching you. So the Director General Foreign Trade is asking you have to take an EXIM code or IMPEX code or whatever you call it, and that has to be quoted similar to your PAN number. So that sort of links everything. And the Customs Department was one of the early departments to introduce e-commerce. In fact, that was a success story which others tried to emulate, which Central Excise, then Central Excise did it. So it was the Customs and Central Excise which came in first with beautiful e-commerce models, followed suit with our own income tax department, and then of course the great MCA. Okay, fantastically they came in last, did a mess of it, and today what you have, what you have today. So the IMPEX code is very important because that gets tracked everywhere and that links everything to everything. So here comes the form. Okay, so whenever you're going to export, you have to give a declaration in form EDF. Please note, it should be submitted in duplicate to the Commissioner of Customs at the port or where you are going to export. Now, once he clears it, he authenticates it, he ensures that everything is fine, he will forward the original declaration to his nearest Reserve Bank. There will be a designated RBI wing where possibly every week or every month it will go there. So all the invoices, which means you see this, all the data, and now believe me, it's all captured online. It's not paper, it's online. So the data goes there, and and once the EDF form is submitted through the Commissioner of Customs. So you notice it. Here is one thing where there is it goes directly to the RBI. Then the duplicate form, you don't keep it. You will be submitting it to the authorized dealer. So are you able to see one thing? The Reserve Bank gets information. The AD also gets information. Now this is where the issue comes. Suppose you don't give this to your AD, then he would not know about it. And when the payment suddenly comes in, he'll be in trouble. So you will have to keep track of it. So you have to submit it to the customs, who will clear it and give you a copy, which you will give to your AD, and one copy will go to RBI, And every 6 months, these two entries have to get closed. Can you imagine? Billions and billions of export entries are getting closed. So, and then at the end of 6 months, RBI looks at the unclosed entries and then sees through which AD it came. And then they go and catch him, and then they try to get hold of him and ask him, what happened? Why have you not got the money? Which brings us to the next point. Before that, soft-X. So when you are exporting soft-X software, then you will go through the soft-X form. So that is submitted in triplicate, okay, to the officials who will sit very much in the STPI or the FTZ. They are not going to be outside. They are going to sit there and they certify the soft-X form. Then the designated official shall forward the original to the RBI and the duplicate to the exporter. And the triplicate will be written by the designated official for record. Then as and when the money comes in, gets closed, and this closure is very important. On the realization of the export proceeds, the duplicate copy of export declaration form shall be retained by the ADs. So it's with the ADs for audit purposes. So every entry should be closed. Whenever we export, it should be closed with a payment. All this is more of rules, and there should be evidence in support of your declaration. It should be submitted, and what is mainly the value, whether the value is correct. Okay, we already saw this. Section 6 is also there of the Act. Section 6 is subsumed in what I'm talking about here. The content of Section 6 of FEMA is almost reproduced here. Now, the amount of the full value of the goods exported shall be paid through an authorized dealer. So you can't just say, you know what, I exported to Europe, and I met this guy when he was in Amsterdam, we met at the pub, and then you know what, he gave me the euros and I bought it back. You will be arrested. Okay? Because there's an open invoice, the money should come in only through the authorized dealer. So, you might be wondering why I keep on giving Amsterdam as an example. Okay? And why not Paris? Or why not Vienna? Just check out why Amsterdam and not anywhere else. That I'm not going to tell you why. I've been to Amsterdam twice, and I tell you, you just go and find out why Amsterdam. Nothing to do with, I have the highest regard for my Dutch friends, the Netherlands, but then just check out why. In fact, no, I will not tell this. You have to do your own research and find out why Amsterdam. But then I'll give you a clue. There was a novel by Alistair MacLean called Puppet on a Chain. Okay? Puppet on a Chain. It became a fantastic movie with a final, boat chase, which is very famous and very old movie. Alistair MacLean. Just go and have that movie, that novel is set in Amsterdam. Or Puppet on a Chain. Just go find out, go figure why Amsterdam is so great. Okay. So, the period within which the export value of the goods should be realized. So they've given you time. But earlier, just for your information, it was 180 days, that is 6 months, those days. Nobody could do it within 6 months. And so then now they've relaxed it, and they said you can repatriate, realize and repatriate. Friends, you might ask me, what is the difference between realize and repatriate? Isn't there a difference? For example, when I collect the money from the party, I realize it. Now, obviously, it might be realized abroad, in which case I have to repatriate it. I have to bring it back to India. So unless it comes into India, so I cannot say I've got a subsidiary there or a branch there who operates an account and they collected it. It should be brought into India, or at least when we say into India, we don't mean physically into India. It should be brought into the Indian system where the Indian government gets access to that forex. Which means you can definitely ensure that it is collected through an offshore banking unit of an Indian banking company. In which case, that would be as good as repatriate. Because once it gets into him, he is an authorized person. So he will transfer it. See, authorized persons who collect forex have to keep track. And then that is actually monitored by the RBI, Reserve Bank of India. Earlier, Reserve Bank of India was the repository of all forex. Today, no. With FEMA, the authorized persons are entitled to deal with it in any way they want. But they are ultimately accountable to the RBI. So the RBI, when it sees an economic crisis and when it feels that, that might be a catch in the parity, they might make it a little less, make it difficult for the AP to take money out or give. But that's again part of an economic policy initiative. And so the money, the forex is now freely usable. Now, where the goods are exported to a warehouse established outside India, the amount representing the full export value of goods exported shall be paid to the authorized dealer as soon as it is realized. So this is the case where you don't directly sell, you take the goods and put them in a warehouse, and as and when you realize, you have to give it, or within 15 months from the date of shipment of goods. So which means 9 months for direct exports and 15 months when they are exported to a warehouse. Now comes the point. In case there is a delay, the Reserve Bank, or the authorized dealer, subject to the directions, may for sufficient and reasonable cause extend the period of 9 or 15 months. So are you able to see the flexibility here? Though there is a prescription of 9 months and 15 months, these are not written on rock. There could be a genuine case. For example, potential insolvency. Insolvency itself is a classic example where the counterparty becomes insolvent. But you can't just like that go and tell your authorized dealer, I sold or I rented this service or I sold these goods to that party. Then you know what happened? He became insolvent. Oh, really? How? Give us a proof. So you need to get some proof from the counterparty that they are either insolvent or they have applied for bankruptcy, and then whatever money comes in, you have to give it back. So these are valid reasons, nothing wrong. But then he is not paying is not a valid reason. He is not paying is not a valid reason. You have to ensure, after all, you supplied goods and you have to collect it. So if he is not paying, then the next step you have to prove, did you take legal action against him? What happened? Okay. Did you take legal action? Why didn't you take? Because today, thanks to the treaty, you rented. Or did you go for arbitration? Is the arbitration pending? Because maybe he's not paying you because you supplied defective goods according to him. So how is that dispute getting redressed? Are you going for arbitration? Is it subject of an arbitration dispute? Okay. Some support should be given while going for a extension of period. So documents pertaining to the export shall be submitted to the AD within 21 days or from the date of certification of the soft-text form. Okay, 21 days of date of export or certification. So you have to. So this makes it mandatory for submission of export documents to authorized dealers, right? And please note, you have to give it an author. So please note, it's not authorized person; it's authorized dealer. Okay, and moving on. You cannot do anything should have the effect of not receiving it. This is why I said, you cannot say, you know what, I felt sorry for that guy and I said, you don't have to pay it. No way. You exported it. Because remember, another principle that I showed you, I explained to you the other day, and this is something you might want to wrap your mind around, because don't be so logical and straight and, like an accountant. Think differently. See, the money belongs to you. The forex belongs to the government of India. Of course, you can say, sir, where is the forex belonging to the government of India? You only said RBI doesn't have control. In principle, the forex belongs to this country because it's getting accounted as part of our forex reserves. And it's being held by authorized persons, not by you. The foreign exchange cannot be held by you. Foreign exchange can be held only by authorized persons with knowledge of the RBI. So that tomorrow, for statistical purposes, when we calculate the total forex available in the country, resources, take all that in account. Because in RBI, there's a whole group of statistics guys who sit and calculate on a daily basis. What is the total export? They get all the information from the ADs and customs, right? Then what is the totality of the import? So quickly they have a measure. How many days can we manage? Okay, are you able to see? This is one thing. This is on the current account. The entire balance of payment is seen. On the FDI, how much we have? CASA, how much of CASA in Forex is lying with banks? And on the outflow how much. So net, how much money, forex resources do I have in the kitty? How long can I handle? 60 days, 90 days, good enough. That means nothing is going to happen. If this is maintained, the dollar and the rupee maintain some sort of a equilibrium. But suppose something goes bad and we are not able to handle this, then which currency do you think will strengthen? The dollar will strengthen, then the rupee will get devalued, which is what happened in 1990. God forbid something similar should happen to us again. Which is why, not saying rupee is strong, but I'm saying we are on equilibrium. We are moving sort of, not too much. Plus, thanks to Manmohan's initiatives and the continuous initiative, we should also appreciate people who came later, like Mr. Yashwant Sinha, others who ensured that inflation was kept in curb and GDP was increased. These are the people whom we should not forget in our eagerness to, we easily forget history and try to focus on what's happening today. Somewhere we have to look at the past. Everybody, even Chidambaram or of course Manmohan Ji and Yashwant Sinha himself, fantastic. To an extent, others also have done it, but not to that extent. I think Yashwant Sinha was fantastic during his period but then he was riding a horse that was already flying, and he was riding a flying horse. Riding that flying horse, he flew it well. He took us. But for the global financial meltdown, see, the global financial meltdown was a black swan that nobody could predict. But India wasn't actually part of it. We got hit peripherally when the whole financial markets collapsed. 1.5 years later, our insulated market also sort of had to deflate. But for that, we were riding. Of course, that was a cycle that got over 2008. What shall I say, the honeymoon came to an end. There seems to be no sight of a new honeymoon, because again and again we are being hit by black swans, right, left and center. Black swan events are happening, so many black swans, and then of course the corona came, ultimate black swan. We don't know when it's going to go and what's going to happen, how things are going to happen. Everything is uncertain. Anyway, welcome to my world. World of uncertainty, a world of volatility, complex world. Okay, and I love it. An ambiguous world, and I love it because that's how the world should be. I don't want to know what's going to happen tomorrow. Then I have to do something today about what I think is going to happen tomorrow. That's the way I live my life. Expecting certainty in a world of uncertainty, very funny. Not going to happen. Not going to happen. Expect uncertainty and you will be safe and you will be prepared. Okay. So he should not do anything to delay the payment or receive it in some other way, etc. Just read this. It's fairly simple. Just remember the principle. The principle that I gave you, then the whole regulation you don't have to read. It will be clear to you. It's only procedure. But the principle is realize, repatriate within a period. Ensure that the proper value is exported and collected. This is the principle operating. Okay. Of course, the Reserve Bank may give to any person who sold the goods or software such directions for the purpose of securing the payment, etc. Which is why when you are nearing that 90 days, don't sit idle. If you are a smart CFO, what you should do, go to your authorized person, tell them that there's a chance that I may not be able to realize and repatriate. These are the reasons. So that the whole thing gets escalated. And once it's escalated, you can get a direction from RBI. So, in fact, this happens regularly for many of our clients. And we have given them a template. If there's a CFO there, we give him this template and say, hey, please do this. Where there is no CFO and there's an owner-driven business, we do it for him, but then we very clearly tell him, this is important. Don't do this. So he might be having an export department who may not, the finance department may not have the ability to handle it, but the export department has. So we sort of work in tandem with the export department, advise them and they do it. So in any case, they keep track with the AP. So in many cases, the owner handles finance, then AD dealings with the AD, there will be a guy in export department who is also into banking, invariably. And that fellow will be sort of sort of aware of all these things. He would possibly be a graduate. He wouldn't know anything about finance. Maybe he might be even a science graduate, but then he would have done this work so many times and he would have gone to the bank so many times. In principle, he knows what's happening. So we work in tandem with him and we tell the client, see, we don't deal with the finance department. As an audit firm, I don't deal with the finance department. Okay, what I mean to say, I deal with them only with respect to they are the people who have the access to the financial data. I talk to them and ask them for the data wherever possible. But I deal with every department. I am not an auditor of the finance department. I am the auditor of the company. And as such, I will talk to every head. I will talk to the export head. I will talk to the purchase department. I will talk to each one of them. And sometimes finance people get a little upset when I do this because they say, whatever you want to ask, you ask us, we will ask them. I said, I don't want to do that. Are you saying I shouldn't ask? No, you can, but then they don't understand. Sir, if they don't understand, I will make them understand. You don't worry. This makes it a little tough for finance people to work with us initially because they realize that, we are getting access to information which sometimes even they don't have. Sorry. And then the audit becomes a different kettle of fish altogether. For the first 2 years of an audit by me, it's going to be really tough because they're going to be really hit right out and center. Then once they understand the direction where we are going, they align, automatically the processes start getting corrected. You see, as a statutory auditor, I ensure that over a period of time, my audit is moving them. Like moving a herd of goats or buffaloes, I move them slowly in the direction where I want to go. It takes 3 years of statutory audit for me to do this. With the 4th year, they know what is what and the systems are in place. So that's how this is a totally different take on auditing. Maybe you wouldn't find it in your auditing paper, but it's worked for me. So and my clients are very happy at the board level and at the audit committee level because they say, hey, first year it was so bad. Second year, third year you're coming out with lesser and lesser points. Why? I said, hey, your systems have improved. These guys have finally learned that where we are coming from and they aligned to us. And that happened only because I didn't talk to them and take their view as the final view and that the finance guys are godsend. I respected them for what they are. But then I went to every other department and collected information. Whenever there was a mismatch, I said, correct this mismatch, especially in this case. So when the export department is sending out invoices right, left and center, the finance department has no clue as to what's happening. So now itself go and apply and so on. And so we set processes in place. Sometimes they come back and say, this year you're going to qualify. Next year, what are you going to do? I said, it's not what I'm going to do next year. It's what you are going to do next year. What are you going to do about this? How are you going to change your system? How are you going to work with the new process? Okay. If you got an internal auditor in place, fantastic. Ask him to come and meet me. And we'll work out a process by which he will help me to monitor you. That's how it should happen. And that's how it happens for me. Okay. So, where an exporter receives advance payment from a buyer, then the shipment should be made within 1 year. You can pay interest at LIBOR plus 100 basis points, okay? 0.01. And the documents covered in the shipment are routed through the AD. Now, this is one fantastic area where the authorized dealers misuse it. Sorry to say this, they misuse. You know how they misuse it? Money can come into India. Either in current account or in capital account, right? Later on, you're going to see capital account. It can either come in through as equity or it can come in as loan. If it comes in as loan, it has to go through the ECB norms, which you'll be seeing. So it has to come through the ECB norms. ECB norms are tough. Okay? But then the company wants somehow to get the money into India. Then the only other option is current account, which means either it comes as a payment for export of goods or services. But then there's a third entry there, which is advance. So the AD, sort of gets into a fantastic solution mode and he calls the CFO and he tells him, okay, what do you want to do? You want to get money? No problem, get it in. Just put under 103 and then say it's an advance against exports. What happens? Nothing happens. The money comes in, this fellow uses it for some other purpose. And the beauty is the party sending the money, the subsidiary, the holding company abroad, they account it as a loan for their balance sheet. Whereas this guy is going to account it as an advance for goods. There was another case where an authorized dealer fully made this guy raise invoices and bought the money in as payment against invoice. So when we went for the audit, we found huge credits. And we asked this accounts guy, what's happening, yeah? These amounts are all, what are they? No, they are all payment for invoices. Oh, really? Where are these invoices? Show us the invoice. Where have you accounted it in the revenue account? No, that we are keeping it pending. Why pending? The invoice has been raised. In other words, only the gentleman who was in charge of the company at that time, person from Australia, he didn't understand Indian law. And in spite of our continuous suggestion, Mr. X, please call us, we will advise you. He said, I don't need you, I know what I'm doing. And he talked to the banker. Banker did this. The banker made him raise invoices. Foolishly, see who did it? Not somebody who has awareness of FIMA or exchange control law or regulations. Some flunky sitting there, monkey sitting there in the branch, half-baked knowledge. It says raise an invoice. Because this guy has attended some seminar at the bank which said, if it's against invoice, no problem. So he raises an invoice and the money comes in. So as far as the bank is concerned, the entry is closed. But as far as the client is concerned, the entry will never get closed. It's a nightmare. Because he cannot book it as a sale. Because if he books it as a sale, the other party should book it as a purchase. And they are not booking it as a purchase. They are booking it as an advance for like a loan. They are treating it like a loan, intercorporate loan. Big nightmare. How we solved it, no, don't ask me. Solved it. Okay. Now the point here is, actually there's no problem here. It will never get detected. Because they are two separate things, right? From the RBI point of view, it will get closed. From the income tax point of view, we get into trouble because in the balance sheet, this will appear as a loan. And if it's going to be there for more than 3 years, the income tax department is going to ask you, what is this? So finally, we convinced the client to go to the Reserve Bank of India, fall at the feet, even pay a nominal compounding fee and regularize the matter. Then we got a special permission for repaying it within 3 years. Then slowly we repaid it. But the normal time within which the goods have to be exported is 1 year. You cannot repay the advance. So in this one special case, got that facility and they repaid it within 3 years. Okay? So that's why I said there's a lot of space there, provided you know how to handle it. But it was a nightmare, which took 2 years to happen. For that approval to come, it took me 2 years and easily 15 visits to Mumbai. And pain, headache. Make them understand, because basically it's a violation. And now you know why the RBI also was very cooperative, because one of their own authorized dealer was involved in this. So they also said, okay. And then finally we made a whole thing out. We still treated it as sales, but then we paid it back. And that way we closed the open account. So, sorry, I'm sharing a lot of stuff with you that may sound unnecessary or too practical. But then welcome to the real world. Welcome to the real world where you have to work and earn your livelihood. That's how it is. Okay. So we've seen this. There's one exception where the export agreement itself provides for shipment of goods extending beyond the period of 1 year. Then you could do it beyond 1 year. So as we said, RBI can issue directions in certain cases, okay, and so on and so forth. Not much. Okay, project. There are certain exceptions to the repatriation rule which we saw in the case of project exports, okay, and so on and so forth. So this is the crux of export. Once they have asked the question about a case where I remember a company exports the goods, they export it on as free of cost samples. Remember, the repatriation rule do not apply to export of free of cost samples. All that, just go through it. Now we go to the mirror image of export, which is import. Now tell me, what could be the principle involved here? Here we are a little more concerned because money is going to go out of India now. We don't want the money to go out unless we have strong proof that what we are paying for is what we are getting. Now, who decides that? That is decided by the DGFT, the Ministry of Commerce and Industry, DGFT, Customs Department. They decide whether the payment should be made or not, because they value imports. So, before a payment is sent out of India for imports, and it can be sent only through an authorized dealer, The authorized dealer should ensure that the imports are in conformity with the foreign trade policy in force and the current account rules. Current account rules, of course, you can send payment out, but here the issue of is not only about it is a current account transaction, no doubt. You are freely entitled to carry on with it. But how much are you paying and how much value are you getting back? Who decides that? It's the customs which decides that. Okay, so which means just like in an export transaction, the most important document, because it's the maid's receipt and the packing slip, but everything should have on top of it a document called the bill of lading. Now, the bill of lading, once certified by the ship's authority, is a proof of export. So that means the goods have been exported and it's on board. Thereafter, it's up to the shipping company to take it and deliver it and all that stuff. But as of now, as far as we are concerned, the exporter is concerned, export is over. So that document is very valuable because that document, when taken to the bank, can convert itself into money. In the sense, I can discount it. I can take it to the bank and tell them, look here, I've exported these goods and here's there could be a letter of credit, there may not be a letter of credit. But then usually India, banks do not discount a bill of lading or a foreign bill unless it has a matching letter of credit. So, but then letter of credit is not important, please. There may be no letter of credit. Still, if there is a counterparty commitment, that is the proof bill of lading. So the BL is a very, very important document in foreign trade, just for information. Similarly, when you're importing goods, there is a document called the bill of entry. In fact, whenever you're auditing customs, whenever you're auditing import purchases, invoices really don't matter for me. You might show me 100 invoices. If it's goods, I want to see the bill of entry. One of the important audit procedure is, okay, you got an invoice, good. You compare it to the goods invoice with the bill of entry. Bill of entry should be clean and the value should be accepted, and the customs duty should have been paid, if applicable. So that document becomes very, very important. So whenever money is given for payment of imports, the bill of entry should be there. Okay? And it should be under a proper exempt code, and so all that becomes very important. This is all pretty, what shall I say, procedural stuff. Okay, the point is there should be and the money which is drawn should be utilized for that purpose, or at least it should be utilized for any other purpose for which acquisition of foreign exchange is permissible. If you remember, you cannot do it for stuff that is not permissible under the Act. And as I told you, there should be an evidence of import. Okay, the importer should furnish evidence of import, the customs assessment certificate, which is your bill of entry, and satisfy himself that goods equivalent to the value of remittance have been imported. I think this is the crux and essence of imports. The AD should ensure that the importer furnishes evidence of import and all. Now, many cases, goods are imported by courier. Nothing wrong. You can get a foreign courier, invert courier. So very, very important for you to keep the courier cover. And also the courier would give a declaration of value. Sometimes people make this mistake of undervaluing it just to save some money. If you do that, then this won't tally. See, you're asking him for $4,000 and you're getting back a FedEx courier and the courier value says $500. Obviously, there's a mismatch. Don't do this. Ensure that what is coming in and what money went out should be same. Subject, of course, to other costs which could be there additionally or cannot be below. Cannot get valuation which is below the amount you sent out. Because, for an authorized person, this is a violation where somebody draws money and then doesn't utilize it fully. Okay, but this can happen. For example, many cases what happens, we had a chemical exporter we had a company which imported chemicals. So chemicals used to be imported, but whenever they used to send the money out based on the pro forma invoice, and then the goods used to be imported, and then when the import happens, the bill of entry, due to many reasons of weightage, slippages and weight, etc., there would be small differences between the amount sent and the import value, not exchange difference. Without exchange difference, there used to be a difference. That was because it's a chemical, and there used to be evaporation laws and stuff like that. So what was billed was, say, let us say 500 ton liters. Then what came would be something like 492, 495. Due to evaporation laws in the tanker, something, okay, transportation loss. So that happens. In those cases, you can immediately tell the AD itself that this is how it will happen, and then they will get adjusted, and then the amount will get adjusted. So subsequent amounts will get adjusted, and you have to tell him very clearly, boss, with regard to this this wastage, I cannot do anything about it because I have to pay him the 4,000. I have to pay him for the 500 tons because that's what he's billing me. If I don't get 500 tons, that's my loss, and I have to book it in my books as a loss. So you show him that it's shown as a loss in your books, obviously certified by a chartered accountant, and then it will get closed. And this has to be done frequently. So as I told you, for that client, every 6 months I used to issue a certificate. We'll just verify quickly, tally, because it's part of our audit anyway. So we'll verify it and then we'll certify it and say, yeah, this guy, he lost. And then it should be reasonable. You can't. So I'm just giving you some practical inputs because this is how it happens. So you should make payment only through an authorized dealer. But sometimes when you're traveling abroad, you can pay by an international card. Okay, subject to the rules as to how much you can use and stuff like that. Each international card comes with a limit. That limit is based on the APDIR circular. Okay, you can make a payment in rupees towards meeting expenses on account of boarding, lodging and services related thereto to travel to and from India for a person resident in India who is on a visit to India. For example, a consultant comes to India and does some work for you, you can pay for his stay, etc. in India, right? And so on and so forth. These are all more procedural thing. You can also make payment in India to a non-whole-time director who is resident outside India on a visit to India, because when he comes here, he says, hey, give me my money in Indian rupees because I want to use it in India. Nothing wrong. See, this flexibility is definitely there. When should it be settled? Settlement means import or closing. Your settlement or your import of goods or closure of this transaction should be done within 6 months from the date of shipment. Okay, and if there is any interest payable, it can be paid only up to a period of 3 years from date of shipment. So in case you are paying any interest for delayed payment, you can pay only for 3 years. Now, when you are getting goods on deferred payment arrangement, means you are importing the goods now and you are going to pay it in 5 equal installments. Sorry, it's no longer a current account transaction, it is a capital account transaction. Now it's a clear capital account transaction because though you got the goods in, when you got the goods in, what entry you passed? Machinery account data to party. Then you passed an entry, party account data to bank for 1/5. So the remaining 4/5 is lying in the balance sheet, the liability. So since you are altering a liability of a PROI in India, automatically it becomes a capital account transaction. It goes under ECB, that's all, nothing great. It becomes an external commercial borrowing and you have to satisfy those norms. If you are not satisfying, friends, I will keep on repeating it any number of times, go to the RBI, tell them your problem, get a special permission. As usual, there's AD can consider granting extension of time, which he can, and okay. There are also specified guidelines for extension of time. For example, rough cut and polished diamonds have a different guideline altogether, then that will be applicable. As I said, while extending time, the AD must ensure that the import transactions covered by the invoices are not under investigation by the enforcement directorate. Because in many cases, there would be other problems. I don't want to go there. See, once you go into the port, cases come in, The case means wooden cases, they come in. They are marked. Customs people open one or two. Who knows what's there in the rest? Thing like that. Suddenly they get caught. So, such cases it will be kept pending. They won't give extension and all that. And considering extension beyond 1 year from the date of remittance, the total outstanding of the importer does not exceed $1 million or 10% of the average imported remittances during the preceding 2 financial years. So you can't keep on accumulating exceeding 1 million or 10% of your average import remittances, whichever is lower. Okay? In other words, you cannot use import of goods as some sort of a loan arrangement, right? Cases not covered with above instructions beyond the above limits will be referred to the concerned regional office. As I told you, when in doubt, consult your AD. When the AD is in doubt, ensure that he consults his Mumbai concerned person in Mumbai who heads ECD or who is part of ECD. That person won't have a doubt. You will get your solution. And of course, if you have a good professional advice, that definitely helps. So, the bill of entry extension period, etc., would be reported in the report given by the authorized dealer. Now, you can also import foreign exchange itself, means bringing foreign exchange into India. Banks do it regularly. They have general permission to do this. And you and I can also bring in. For example, somebody is entering India, they can bring with them in totality currency notes, checks, travelers checks, bank notes, the total value not exceeding $10,000. So when I'm walking back to immigration, back to India, so I feel so happy I'm back in India. So but then how much dollar can I bring back? In currency, I can bring back only $5,000. Traveler's check, etc., I can bring. But then today, who takes traveler's checks? Today, if you got an international card, more than enough. You don't need cash also. Go wherever you want. You need just very small bit of cash for spending on the road and stuff like that. Having a cup of tea, 7-Eleven. That's about it. Much of it you can do on a card. If you have a good international card, that's more than enough. And but then still, you can have $5,000 you can bring back into India. You can also hold $5,000 in your house. To $5,000, you can hold it in your house. Nothing wrong. If you have 4 people in your house, 20,000. Because you will have to tell where you got it from, the income tax department. FEMA, no problem, up to 5,000. Now, if somebody has gone out of India on a temporary visit, he can bring back rupees 25,000. But when you are going to Nepal, currency notes of Government of India and Reserve Bank of India for any amount in denominations up to rupees 100. Now, you will understand this only if you have traveled to Bhutan. Because when you go into Bhutan, please ensure that you take ideally the old 100 rupees or at least the new 100 and 200 rupee notes. Anything above that, they don't accept it in Bhutan. If you just try to change a 500 rupee note, you will find a lot of resistance from shopkeepers and hotels and all. If you try to pay in cash and you are giving 500 rupee note to a hotel where you stayed, you will find they were not very happy. They will say pay by card or give us 100 rupee notes. How can I pay 100 rupee note? Okay, but then that's how it is. Because I think by now you got the reason why this reluctance to accept our currency. Not because our currency is bad, but because so much counterfeiting is going on. There's so much counterfeit notes running around in Nepal and Bhutan, thanks to our neighboring countries, that they are so afraid of these 2 notes, 500 and 2,000 notes. Still, depending on the genuineness, seeing who it is, they tend to sometimes help you and they take it. So I changed 2,000. That was an art of convincing. My wife was really impressed because that I'll change a 2,000 rupee note. Bhutanese lady was running the restaurant. She finally saw something good in me. She said, okay, you're a good man. I will take your money. She took 2,000 because otherwise I had no money to spend. Nobody is accepting 2,000. And like a fool, I had bought a whole bunch of 2,000 rupees notes thinking, my currency, okay, I am an Indian and all. They said, no, if you got 100 rupee note, give us. Luckily, my brother-in-law was smart. He had got a whole bundle of 100 and 200 rupee notes. So I had to take from him. Then once I changed this 2000, I was back in business. So it's unfortunate that our currency is counterfeited and distributed in these two countries, so that the faith in our currency is going down. Anyway, so overseas direct investment is another example. Money going out of India into to other countries. That's called ODI. So I'm going to slightly run here because there's nothing great with this. Okay. What you might want to understand is when we are talking about direct investments outside India, we are talking about contribution to the capital or subscription to the memorandum of a foreign entity, or purchase of existing shares of a foreign entity, either by market purchase or private placement, or through stock exchange, signifying a long-term interest in the foreign entity. So basically, you have in your balance sheet, this should come under the head investment, not stock in trade. Okay, you are investing in a foreign subsidiary or a wholly owned subsidiary abroad, or a JV where you are going to take a stake of 40% or 50%, whatever. You have a long-term interest in the entity, so you're going to treat it as an investment, and accounting treatment is going to be accordingly done, right? Whereas you can't make portfolio investment as of now. Okay, I'm again and again saying as of now because anytime the government of India may come out with the RBI may come out with guidelines on foreign portfolio investment, because I think we are becoming mature enough to be permitted to do that. As I said, we are now grown up. As not as human beings, we are all grown up. The country is grown up, so we are entitled to do whatever we want and go abroad. But as of now, no. Still, for example, the keys to the car are not yet given. Okay? Once somebody becomes responsible, we hand over the key and say, please drive, because now I have confidence that you can drive. So even now, because the experience in our own markets puts fear. Suppose you let these guys go there, and they will not only spoil themselves, they will spoil that market also. So they said no. So there's an automatic route for direct investment, which is any financial commitment exceeding $1 billion would require prior approval of the Reserve Bank. Okay, even when the total foreign commitment of the Indian party is within the eligible limit. So the eligible limit under the automatic route is 400% of the net worth as per last audited balance sheet. Net worth is paid up capital plus free reserve. Free reserve definition as per Companies Act, no problem. So 400% of net worth. 4 times your net worth can be the ODI, which means companies that have a huge equity base can easily go for ODI under the automatic route. Companies that aren't having equity will have to be done. That too, there's a cap of $1 billion. So up to 1 billion you can go, or 400% of net worth, whichever is less. Anything beyond this, you have to go for approval route. Okay. So you can invest up to this limit in ODI, right? And whenever it's going beyond that, the Indian, even for ODI, within the approved route, you should go to the authorized dealer with an application in form ODI, and then you should, then that's all. Once it goes there, the AD will guide you, and then the money will be transferred. We have done it for many cases where clients have gone abroad and set up units for exploiting opportunities abroad. It's pretty easy. So once you have got a clarity, the AD will help you send the money out. Okay. But then the ODI form also wants to ask you how comfortable are you, prima facie viability of the JV, all that, expertise and experience of the Indian party. For example, we had an Indian hotel chain which was already having international branches, wanting to set up a joint venture in Sri Lanka, and we did it for them. And that particular chain is doing very well in Sri Lanka because the food is tasty there. The Indian food that they make is very popular in Sri Lanka. So they make good money there and they bring the money back. Okay? So once you go through the ODI, you should also commit to bring the money back or to get some return on the investment, because once you get into an ODI, then every quarter you have to file a return. The Reserve Bank of India. Every quarter you have to route a return to through the AD to the RBI. Tell what's happened to your investment, whether the investment is increasing in value or reducing in value, etc. Okay, even individuals, not companies, satisfying the particular criteria can make investments abroad. In fact, the chain investment that I spoke about, the investment was made by an individual, not by a company. So there are certain prohibitions. Just as we don't want them to come and buy real estate in India, we don't want Indians to go and do real estate or banking business without the prior approval of the Reserve Bank of India. We also don't want Indian money to go out there for offering financial products linked to Indian rupee. For example, you can't go out of India, put your money in Hong Kong company and then try to do hedging on Indian rupee. That's not a good idea. You can do that with approval. See, the Tarak Mantram in this whole topic of FEMA is with the approval, with the approval, with the approval. That's all. There's a general approval, good. Otherwise, you have to get a specific approval. So, general permission has been given for making investments out of the RFC account, taking bonus shares. Okay. So, when not permanently resident, out of their foreign currency resources outside India, okay, and you can also sell the shares purchased. Okay, not trade, you can sell. Okay, but when you sell the shares, there's another regulation which will come in. Should be FCTRS. Either way, when a foreigner sells shares in India or a Indian sells shares in a foreign country. So we've come to the last topic, and I have exactly half an hour more. It should be sufficient. I'm not having any questions as of now. Nishant ji, I will share with you in person through your email ID.
Sir. Yes, sir.
Yeah.
Hello?
Yes, madam. You can tell me.
Yes, sir. Yes, sir. What you are saying, sir?
Nothing. Somebody wanted my number. I said I will share it in person, not in the public forum.
Fine, sir.
Not in the public forum. I will not share my number in the public forum for two reasons. One, that also amounts to an advertisement. I am a practicing chartered accountant and I am not supposed to advertise. So here I am a teacher. So don't worry. My suggestion, if you have a doubt, you quickly put it up here. But if something very private, don't worry. I will connect you on your email ID and we can talk about it. Not a problem. Don't worry. If any of you has a issue there, you can definitely get my not my number, my email ID from the Board of Studies and you could communicate with me. Email is better rather than number. Because sometimes I'm busy, I'm not able to take your call, and my WhatsApp I generally see only once in 24 hours or thing like that, 36 hours. Rarely, I don't keep on looking at my WhatsApp and all that. I'm not that type. I do use WhatsApp. Don't think I'm a moron who cannot use technology. Friends, my generation, which was born in 50s to 55 to 60s, you know, the 55 to 70 generation, we saw the computer coming in. We saw it growing. We saw you being born and you growing. We saw computers being born and computers growing. I was in software business myself from 87 right up to 2000, 99, 2000. Right up to 2000, I was a software designer. I used to design software. So we've seen it. So it's not that we don't know what computers have done and what they're capable of doing. But then we don't let this dumb machine distract us. These dumb devices cannot distract me from the real purpose of my life, which is dual. Okay? It's dual. And so the real purposes of my life are more important than just simply gazing at this machine, what other people are telling, liking, and or even worse, giving negative comments to them. Avoid all that. Your life is more important than all that. Your purposes should be greater than all that. Every day should be spent on doing something relevant that will add to your long-term growth as an individual in terms of growing yourself in material life and also in your spiritual life. You're not able to do that if a day passes when you've done nothing to enhance your material wealth or your material life or at least your spiritual life, then that day is a wasted day for you or for me. Okay. So, coming to ECB, see, external commercial borrowing is a big bugbear. Earlier it was very stiff. Not a pie could be bought into India. unless you know it's complied with. So now, so very, very important, okay? Alert, listen, go to RTP. There is a new set of guideline for ECB. Okay, hot. It's there in the RTP. I'm summarizing it here. When you go to RTP, you'll find some more things are there. Please read it. But the essence of it, I'm going to give you here. Okay, in the next few slides. External commercial borrowing means borrowing in foreign currency or borrowing from a foreign source. Government of India is very worried. FDI, we are so happy, freely permitted. Come on, enjoy. Put your equity in our country, no problem. Because equity cannot be taken out so easily. The flight of capital for equity is slightly more difficult than debt. Whereas debt, there can be a flight of capital suddenly out, which could result in fluctuation of our currency. So, with a view to protecting the stability of our currency, they say, please be careful while borrowing. So they put in place some sort of a framework for external commercial borrowings, right? That framework is what we are going to see now, and that framework is talking about, I'm just going to take you through that framework, the salient points of that framework. The first is currency. You can borrow in any freely convertible foreign currency. You want to know what they are? Just go to the net and see. There are a lot of currencies that are freely convertible. Okay? Obvious examples are US dollar, euro, all that, GBP. They are all freely convertible. You can also borrow in Indian rupees. But then God only knows why you would do this. Please, don't. They are giving you the facility to borrow in Indian rupees. But God only knows why you would do this. You know why? Because from a forex perspective, you have to be very, very careful. The minute you are taking ECB, or even when you are taking foreign investment, but foreign investment, I don't know the terms of issue, okay, and the repatriation, subject to that. But ECB or any commercial borrowing from abroad, remember, you are borrowing in a particular currency. So you have two costs now. One is, of course, the interest cost, which is A. B, the currency cost. Now, if you're going to get it in INR, what will happen? On one fine morning, it will be converted to and given to you. So thereafter, you are going to keep it only in Indian rupee. So why you would want to do this, God only knows. If you want to do it, please do it. It is allowed. But suppose I am borrowing it in dollar or euro, good. Because then I can retain it in dollar or euro. In fact, I can do a little bit of hedging there. Hedging possibilities are there for me. I can, because in those days, the classic strategy used to be, you take in ECB or you take in GDR. Whatever you're doing, you bring in, you issue global deposit receipts, don't bring in the whole money, keep 25% out, which you are permitted at that time to do. The Reserve Bank of India actually permitted you, even though they do it. Keep 25% out and use it to hedge currency risk. Just use that as the margin to hedge the currency risk. The 75% you invest in the project. So you have a natural risk, but then the investment in the project is in Indian rupees. So later on, you will have to repay 75% or amortize this loan in dollar or euro. Whereas the dollar or euro, there is a risk there. So obviously the difference you will have to pay out of your pocket. The difference in euro when you borrowed and the difference when you repaid. So that could be covered by your hedge which you are doing abroad. Now all this is possible if in foreign currency denominated loans. So you can borrow in any foreign freely convertible foreign currency. What could be the type of loans? Bank loans, floating or fixed rate notes, means bonds. All are one and the same. The notes, bonds, debentures, secured. Debentures could also be secured other than fully and compulsorily convertible instruments. Okay, because if it's a fully or compulsorily convertible instrument, it would come under FDI, it would not come under ECB, right? And then of course you have trade credits beyond 3 years. Then you have foreign currency convertible bonds, okay, and foreign currency exchangeable bonds. They are subject to separate guidelines as to how they can be issued and all. And of course, even a financial lease. Okay, all these are covered for Indian rupee also. Now, later on, maybe, see, when you're going for a IDR, that could also come under this category. IDRs are not yet there, but I'm sorry, GDRs. But GDRs come directly under FDI. Global deposit receipts come under FDI. You can go and issue and bring it back. See, in all cases, when you're borrowing or acquiring money from in a different currency, remember you have to handle your interest risk. In other words, business risk, project risk. The project should generate enough cash flow to repay and earn more than the WACC. Simple. If the project is not doing this, that's one loss. Plus, you should be able to repay subject to the currency risk. Are you able to see the double risk here? Now, in your project evaluation, you cannot bring the currency risk into it. You cannot, because it's not predictable. Okay. Your cash flows are already dicey. Now you're also including foreign currency risk. You can try that model. I would love to see that, how somebody does that. But I suggest you separate the two, so that you handle the business or commercial risk on one side and you handle the currency risk. So it's very important for you to be able to do this. If you're not having the maturity to do this, then this is not easy money. This is not something that you just get from Germany and it's a free money. No, it's very costly. It's though it looks very cheap. Remember, when you take the currency risk into it, it's not that cheap. It could still be viable. So the other way of doing it is, when you're calculating your risk-free rate, when your risk-adjusted rate of return for your discount rate, you could build currency risk into that. Okay, that's one way of doing it, but both are good. I suggest that you don't do that. You measure the currency risk separately. But if you're very smart, you can do both. It's a very complex model. If you do that, then you have to keep track. See, you should not miss out on currency risk. It's so easy to ignore the currency risk somewhere. Okay, and because currency risk today is very high. World economy is, as we said, in a VUCA world, currency risk is very high. You have to be very careful about it. Just because you're getting at LIBOR plus nothing, it's not easy money. Carries with it a very, very huge currency burden. You're ready for it, take it. Or pray that the Indian rupee should think. Then again, be careful. Okay. Who can borrow? All entities eligible to receive FDI. Fantastic. What a liberalization. So, if you are eligible to receive FDI, you can. Also, others can also do it, port trust, etc. So, this is a good liberalization for you, which is fantastic, because earlier ECBs were restricted. The limits were very tough, and nobody else could go unless you are rated and all that stuff. Only then you could go. Now it's not so. Anybody who can get FDI can go. Thank you. So the lender should be a resident of a Financial Action Task Force, FATF or IOSCO, the International Organization of Securities Commissions. So the country should be a FATF or IOSCO compliant country. Okay, just go and do this research for me. Just go and put FATF and IOSCO and just see which are these countries which are non-compliant. There's a gray list and a black list. So look at both the lists. So it should not be somebody in that list. Okay. This is publicly available list, and don't think it's some secret. You can find out now, here and now, sitting in front of the computer. You can just listen to me and go there and just type in FATF, and then you will get the whole list. Okay, you'll be very surprised. Most of them are great tourist destinations, but also great money laundering venues. Right? Antigua, Nama, as I was saying, Saint Kitts, nice places to go and relax. After that, what is that fellow's name? Who cheated PNB or something and ran away. That gentleman, he went to Antigua. Okay, wow, great place to hide. And multilateral and regional financial institutions where India is a member country, so on and so forth. Individuals as lenders can only be permitted if they are foreign equity holders or for subscription of bonds, debentures. So if he's already an equity holder, he can lend money. But a total stranger cannot do this. Of course, foreign branches and subsidiaries of Indian banks are permitted as recognized lenders only for foreign currency ECB. Because some of these banks, they are able to generate foreign currency income and they are able to get foreign currency deposits from NRIs. So they have to deploy it, right? I see an ideal situation would be you want to set up a startup company in US, you go there, you show your credentials, you borrow, you take an ECB, you use it for promoting the startup. there. So that the ideal would be, and I am supported in this by the great Ashwath Damodaran, the valuation guru, who says, if you got a borrowing in one currency, please deploy it in that currency. So that is a natural hedge. That is a natural hedge for you. You don't have to bother. But the minute you take one currency and then you put it in another currency, automatically you have to do some hedging. Otherwise, you are in trouble. Some hedging, okay, you have to do. Unless you are so bullish about your currency, then you are a citizen of the United States of America. And even they got hit 3 times. When the dollar weakened, they got hit. Really, really hit. Okay. So the minimum average maturity period for ECB is 3 years. Okay. If there's a call or put option, means either the lender or borrower can ask for an early repayment or then prepayment, then it will be accessible only after the completion of the minimum average maturity. So there's some sort of a lock-in period of 3 years. But there are some specific categories where the period can be extended or reduced. For example, ECB raised by manufacturing companies up to $50 million. The minimum period is 1 year, right? ECB raised from foreign equity holder for working capital purposes, 5 years. ECB for working capital purposes or general corporate purposes, 10 years. Now, here's something called on-lending by NBFCs. For example, NBFCs can take an ECB and use it for lending to local businesses for working capital. Very nice thing, huh? If you are a very powerful chartered accountant and if you are employed with an NBFC, you can do this. But then remember, your IRR, again and again note it. Your IRR should be kept in track, and your IRR should not be diluted by your foreign currency risk exposure. You're able to handle this well, and you have a nice portfolio, great business to be in, and you got 10 years to repay it in. You can take 10 years to repay your loan, and you can make your money. And 10 years is limits, sir. If you don't please think of a project beyond 10 years. 10 years is too much in this world, unless you're too good, because anything can happen. Once in 10 years, anything can happen. So don't go beyond that. Similarly, ECB raised for repayment of rupee loans availed domestically for capital expenditure. No problem. As we told you, INR based. Repayment of rupee loans availed domestically for purposes other than capital expenditure, 10 years. Just try to remember this. There is something called the all-in cost, which includes the rate of interest, other fees, expenses, charges, guarantee fees, the whole thing put together. This has been pegged at the benchmark rate plus 450 BPS. So if you're going for LIBOR, then it's LIBOR plus 4.45. That's it. Believe me, that's not a big amount. We want 2.35, 2.5, 2.6. Sounds very good interest rate, right? Please remember, it comes with the package deal. Okay, you can't marry the younger sister unless you marry the elder sister. I'm just giving a good example. Don't get me otherwise. So when you get to marry the elder sister, you get to marry the younger sister also. Sounds like a good deal, but could be a bad deal, because you get a benefit. You get to marry the younger sister, you get a benefit in the form of lower interest rate, but then you get the elder sister also, which is the currency risk. You have to take both of them together. You cannot take one of them. It's a package deal. And if you're willing to take the package deal, live with the package deal, it's great. And that's what you're training yourself for. That's why you're struggling. This is it. This is the cutting edge of finance. You're able to go here and work. You make your money. You make money for your company. You make money for yourself. That's it. This is where our profession shines, in my humble view. It's capital markets, currency markets. You're able to go there and work. That's where it's great. Not that mundane work as a CFO is good, but then most of it is algorithmic now. The real cutting edge now is in currency and capital markets. So, of course, there should be a prepayment charge or penal interest, if any, for default or breach of covenants. That should not be more than 2%. The other costs should not be more than 2% over and above the contracted rate of interest. That's how it is. Then there is no restriction on what you can do with it, except for a negative list. The sense, you can use it for anything, but don't use it for real estate. You can't take this money and put it in your capital market. See, what will happen is you will again disturb the equilibrium. So the RBI says, no, don't bring that money and put it in this capital market. If you want to put money in the capital market, there's another route we've got where he can come directly through the portfolio route. He can come directly. 24% of a company's shares can be invested as portfolio investment. Up to 24% of a company's capital can be invested as a portfolio investment. So you can go there. Why are you borrowing money and putting it inside? Can't do that. Similarly, you can't take the borrowed money and put it in as equity investment. And other than B and C, you cannot use it for working capital. But B and C are meant for working capital. Similarly, other than B and C, you cannot use for general corporate. Similarly, you cannot use it for repayment of rupee loans, except D and E, which are rupee loans. And on lending cannot be done except by an NBFC under C, D, and E. Only an NBFC can do it under C, D, and E. Believe me, there's a huge opportunity here. You can take definitely cheap money, not cheap money. It depends. See, in fact, if you've got a floating rate, then you've got a third risk working there for you. If you're taking a floating rate, then you've got a third risk working for you. Or if it's a fixed rate, then you might miss out on opportunities. So think about the type of hedging you have to do. You have to hedge on the interest, you have to hedge on the currency. So two important hedges you have to do, and then you have the commercial risk, for which there is no hedging. There's only hard work, smart strategy, predicting and flowing. Okay. Now, in spite of this, companies like Hero MotoCorp make huge money because they know how to handle these risks. Companies like Hero MotoCorp, I'm just giving one example, know how to handle these risks. So once you know how to handle these risks, you make a lot of money. So there is a limit. All eligible borrowers can raise ECB up to $750 million. In the case of foreign currency denominated ECB from direct foreign equity holders, then your liability to equity can be as high as 7:1 under the automatic route. Okay. But then it can't go up beyond $5 million, maximum $5 million. You can go up to 7:1. Okay. But this could be a great thing for some companies which are having a solvency problem. They could try to take low-cost money, do a little bit of hedging, pump it in, build their businesses. So the basic procedure for ECB is, let me see if I have time. I'm sure we have time. I have another 10 minutes. Just give me 5 minutes this way, that way. Basically, you just have to go to your AD with the form ECB, and the AD will then forward it to the Reserve Bank, and the Reserve Bank will do just a recording, that's all. If it's automatic route, it's just recording. But for approval route, the RBI will send back sort of an approval saying go ahead. Once the approval is in place, you can go ahead and finish your ECB. So friends, I hope I have completed this. So thank you. Yeah, it's a very exciting thing. In fact, I'm sure Institute also would come out with some nice certification programs for foreign exchange. I think there's a crying need for Institute to come out with such programs, so that when Ms. Ankita, after you complete the CA, I'm sure you'll do, because if you find that the subject is exciting, then it automatically becomes interesting, then you read more of it, then you become an expert in it. Then I'm sure the Institute would support you with a lot of big, the senior bankers to come in and conduct classes for us, so that, we'll gain more insight into Forex. Believe me, it's a fantastic area. You're all young. 55 years old. I still think there's a lot that I'm going to do, but not in making money. I've made my money. I've enjoyed my life. I've raised, two good children who are going to get settled in their life. And my daughter is a company secretary. My son is doing his final year in law. So I'm sure they will be good citizens of this country. I'm very proud of them. And so that's it. And I've reached a stage in my life when, I can spend this type of time. So my goals are different now. I want to do things that are more driving me towards the spiritual side of it. Okay. But then I am a teacher. I've been teaching since 1992. As I told you, teaching. My grandfather was a teacher. He was a school teacher. My father, now an 83-year-old chartered accountant, was a teacher. He taught in colleges and he taught in our institute and in the ACES Institute. I'm a teacher. My daughter is a teacher. She teaches at the ACES Institute. So somewhere, I love teaching and I love interacting with brilliant people like you. I truly enjoyed, though a few of you have asked me questions, so I could relate to you. But the rest of you, I'm sure, were there with me, listening to me. Thank you very much. I wish you all the very best in the examination, and I hope that you will all clear with flying colors. Okay, so I'm just giving you time for the next 5 minutes. If you have any generic questions, please do ask me now. Okay, we got another 6 minutes or something like that of my time. I'm now opening up the floor for any questions that you might have in FEMA or in an earlier topic or any topic, but then time is limited. But then put up the question so that sometimes if I'm not able to answer it here, I may do that. I might even answer you personally on your mail. So the window is open. Please come in and put up the questions there. I'm just waiting for your questions here, if at all you have. Okay, I don't see anything more. Questions coming in. Right. And very important, ECB, the new norms have come. So kindly, please refer to the RTP. Institute is doing a great job that way of creating material. The Board of Studies material is excellent. Subject to, of course, some revision is going on, which I'm sure will make it from good to great. So the point here is, let's use that. There's no need for any other textbook, etc., etc. Use the practice manual. Use the Institute Board of Studies. In fact, the goal of the Board of Studies is to make the study material complete and one-stop solution for you. It is today a one-stop solution for you. Please go there. And if you still have doubts, feel free to mail me. My mail ID is the Institute. They will definitely share it with you. If you ask them, I'm ready to answer on mail. Prefer rather than a mobile number. Okay, so nothing wrong. You can, but then I may not be able to handle or take your calls because most of the time I'm on meetings and things like that. Thank you very much. Jay, shall we close?